The broadcast is now starting. All attendees are in listen-only mode.
Good evening, friends, and welcome on Connect Easy. We have a wonderful session today, jointly with All Gujarat Federation of Tax Practitioners, also with a Tax Bar Association Bhopal, and also we can see on screen Gwalior Tax Bar Association President Sir Anil Agarwal Sir. We also acknowledge the joint effort of Fintax Chanakya as well. So this is a joint session by all of us for the benefit of the fraternity. We welcome all our guests and the keynote speaker, CA Ketan Vajani sir is already present here, immediate past president, the Chamber of Tax Consultant from Mumbai. We welcome you, sir, and thank you so much for accepting our invitation. So friends, first would like to request Advocate Hiren Vakil sir, President, All Gujarat Federation of Tax Practitioners, for welcome address for all the attendees. So over to you, sir.
Thank you, Virag bhai. On behalf of All Gujarat Federation of Tax Consultants, I echoed a very good winter evening to CA Ketan Vajani, CA Naveen Khariwal ji, CA Aanchal Kapoor ji, and all our dear good listeners in this webinar to analyze the Union Budget 2023 presented by Honorable the Finance Minister Nirmala Sitharaman ji, her 5th consecutive. And a very warm welcome to one and all. I must congratulate CA Virag Shah for keen interest in organizing budget speech and inviting the experts in the field. So far as Finance Bill 2023 is concerned, there is nothing to be benefited by taxpayer except the maximum rate taxpayer got reduced to 39%. Secondly, discrimination of threshold limit for the same category of the taxpayer in terms of status, that is individual, and having age of less than 60 years. One having 2.5 lakhs under old regime and rupees 3 lakhs who opted to pay under new regime. I think Ketan bhai as a keynote speaker and Naveen Khariwal as the expert is the best person to analyze why such discrimination so far as threshold limit is concerned. The post of Joint Commissioner Appeals proposed to be created. Friends, old wine in a new bottle. With these, I thanks to Virag bhai. Thank you very much. Over to you back.
Thank you so much, sir, for your opening remarks and a welcome address for the attendees. Would like to request now Anil Agarwal, sir, of Gwalior Tax Bar Association for his welcome address.
चलो तो शॉर्ट में इतना ही बोलूंगा। आप सबको बहुत बहुत धन्यवाद, बहुत बहुत स्वागत है आप सबका, और विशेष धन्यवाद विराज भाई का जो इस कार्यक्रम को पूरा कोऑर्डिनेट कर रहे हैं। अब अपन ज्यादा टाइम न लेके ज्यादा टाइम अपन स्पीकर को देंगे तो ज्यादा बेनिफिशियल रहेगा। थैंक
यू Anil sir. So would now like to request Advocate Nilesh Kushwaha ji for his address.
नमस्कार सर, थैंक्स विराग सर। आपने आज हमारी टैक्स बार एसोसिएशन भोपाल और ग्वालियर बार एसोसिएशन को इसमें ज्वाइन किया, और स्पीकर्स को भी मतलब काफी अच्छा आज का प्रोग्राम हमारा होने वाला है बजट पे, तो आप सभी को धन्यवाद सर।
थैंक यू सर। एडवोकेट राजुल आर्या सर, प्रेसिडेंट बार एसोसिएशन फ्रॉम भोपाल।
थैंक यू विराज जी। हमारे साथ आपका कार्यक्रम पहले भी हुआ है और काफी प्रयास करके और काफी अच्छे स्पीकर ले आते हैं, उसके लिए आपको बधाई। आज के स्पीकर केतन भाई, नवीन भाई और पैनल पे हैं मौसम जी, इन सब के लिए भी बहुत बहुत वेलकम। और जैसे हमारे सीनियर ने कहा कि मैंने भी अभी एक किसी प्रेस में वही मैं भेजा कि आंकड़ों की बाजीगरी, अल्टीमेटली बजट में कुछ नहीं है, 5 लाख 7 लाख घुमा फिरा के वहीं पर ही है। मुझसे प्रेस वाले ने भी पूछा, मैंने कहा 5 लाख तो है, लेकिन अगर 5 लाख से 5 लाख 1,000 हो गए तो फिर चलेंगे 12 के भाव। वही स्थिति है कि 7 लाख तो 1.5 लाख प्लस 50,000 7 लाख चीज है। अल्टीमेटली आपकी बाजीगरी जनता को खाली घुमाना फिराना, ठीक है, थोड़ा बहुत माइनर बेनिफिट्स मैं समझता हूँ बजट में रहे हैं। एक वो कुछ जैसे प्राइवेट एम्प्लॉइज को उन्होंने लीव एनकेशमेंट पे एक बेसिक अमाउंट बढ़ाया है, 3 लाख से 25 लाख कुछ किया, तो कुछ बेनिफिट्स हैं। अल्टीमेटली बाकी चुनावी बजट है, कोई खास कुछ चीजें नहीं है। और इन डेप्थ एनालिसिस तो हमारे जो स्पीकर्स हैं ये लोग कर पाएंगे। तो मैं वापस विराग जी को देता हूँ कि कार्यक्रम को आगे बढ़ाएं। थैंक यू।
Thank you, sir. We also acknowledge the presence of Advocate Manoj Parak ji, Secretary, Tax Law Bar Association Bhopal, who always help us. And now, without wasting much time, would like to invite CA Ketan Vajani sir, who required no introduction. He is very famous across India, who is one of the renowned direct tax speaker as well, and who is a contributor in many journal and article as well, who is immediate past president the Chamber of Tax Consultant Mumbai. In his president term, we have seen the growth of chamber at multifold. So we welcome you, sir, with this word. Would like to tell that we are live now as of now and go to webinar on LinkedIn, on Facebook and YouTube as well. So with this word, would like to request you to address the attendees, sir. So over to you, Ketan, sir.
Good evening, Virag bhai. Thank you so much, first of all, to Virag bhai and in fact all the associations, all Gujarat Federation of Tax Practitioners, the Gujarat Tax Bar Association, Tax Bar Association of Bhopal, all of you who are involved in this activity of arranging this webinar.
Sir, audio quality is not better. If you can change that audio of previous one, that will be better. Previous one was better, sir.
Yeah, is it better now?
Yes, sir, perfect, very well.
Okay, so yeah, sorry for this problem. So good evening to one and all, and thank you so much for giving me this opportunity to speak to all of you today evening. In fact, let me compliment Virag bhai and entire team, all the association, all the office bearers of this association, to arrange a webinar on finance bill on 1st of February itself is a courageous step actually, because on 1st of February where, people are yet to understand what is the implication of the finance bill, you guys are going ahead and arranging a webinar that to inviting faculty from Bangalore. Naveen Khariwal ji is also going to be the speaker. Miss Aanchal madam, of course, she'll be, I think, I'm not able to see her on the screen, but she is going to join, I believe. And
Yes.
so, it requires a huge effort and it requires a big courage for you to get these people to speak on the subject. Because, it's very short time and within the short time we have to understand the position and maybe this is a first reaction which we can say, and then lot many things has to be absorbed later on. So let me at the outset mention that this is just a first reaction. I have read the finance bill in bits and pieces actually. So whatever I found is something which is affecting a large segment I have read, and therefore I am also relying on this webinar and I am going to learn from Naveen Khariwal ji, because this is something where he might have done some better research. And I was told by Virag bhai that I am supposed to just set the tone and thereafter Mr. Naveen Khariwal will take up the things. So in that perspective, friends, let me attempt to some of the things which I feel is relevant to all of us in our usual day-to-day practice. First and foremost, as I think somebody mentioned, maybe I think Mr. Arya mentioned that there is no big change as far as rate of tax, etc. is concerned. So yes, rate of tax virtually remains the same. Of course, for the new regime, now we have to understand one thing, that probably the message which comes up is very clear, that new regime is going to be the order of the day, and therefore all the assessees who have been using the earlier regime should now reconsider the calculations, should go back to the drawing board and should rework their strategy as to whether new regime is attractive enough for them. Probably yes, because now further the rates have gone down for new regime, and therefore yes, there is a good case for one to believe that new regime will be all the more attractive as it was as compared to what it was earlier. in the old regime, we are not going to get some of the deductions like HRA or maybe housing loan interest or repayment, etc., ATC, all those things. This will have some impact on ELSS investments also, of course, because now people will not be making ELSS investments. So to an extent, it is counterproductive for the ELSS industry. But yes, that is what it is. So one has to understand that these things are going to be maybe the order, I mean, of the situation of the past, and going forward probably the new regime is something which one will be more keen on. We can also see, even for that 87A, if you are under new regime, you are going to get concession till your income is 7 lakh. Otherwise, it will be 5 lakh. So, for all practical purpose, we are told that now we are in fact given a clear-cut indication that please go for new regime. Eventually, one should not be surprised. Maybe 1 or 2 years down the line, this new regime is the only regime available, and therefore the old regime might be given a go by actually. Maybe 1 or 2 years down the line. I would have been in fact happy, if they would have done it now, even now. So whatever you want to do, please do it at the first stage. Don't keep on giving these options, creating confusion in the mind of people that whether new, old, all these things. Why do you want to do so? If you are very keen that you don't want to give any deduction, so be it. Then give it gracefully, make it graceful, and change it. You say that these are the only rates of tax. That is the end of it. Why do you want to have a section in the Income Tax Act? Normally the rates are decided by the Finance Act. And you could have very well done that. You could have given this, complete go by, no exemption to be given, ATC deduction. I want to remove the section 24, interest on house property, etc., etc., so on and so forth. And be courageous enough to say that. But this is how the things keep on happening. Probably in the process, the professionals like us, the chartered accountants, keep on making the calculations only and advising the client, as to what is beneficial for a particular client. All said and done, new regime is the one mantra which the finance minister says that you go for it actually. Also, one good thing is about surcharge reduction. Of course, so surcharge has been reduced. The maximum, which was at 37%, will now be not more than 25% at least. So those assessees who are in the tax bracket of more than 5 crore rupees are going to get a substantial gain vis-a-vis the surcharge at least. Then few amendments are made in 43B. We are told that if I am making a payment to micro, small, and medium enterprises, I have to make the payment within that section 15 time limit as prescribed in section 15 of that act. And if I miss out, please understand that this cannot also, of course, have a situation where I can make the payment till the due date of filing of my return of income. So once I miss out to make a payment to micro, small, and medium enterprise within that date, which has been prescribed in that act, I am going to suffer a permanent disallowance, right? So therefore, this is going to be a big change, game changer provision as far as the micro, small, and medium enterprises are concerned. We'll be having a situation where more and more people will now register, and I'm told the registration is very simple. So therefore, it will be good for all of us also to consider ourselves to be registered under this MSME, and at least so that we ensure that our fees at least comes on time. So that is also one more thing which one will have to see. 44AD, 44ADA. Now these are the provisions dealing with so to say presumptive taxation. And in presumptive taxation, there are so much of confusion. Now they have added further confusion. Now they are saying that if your cash transaction is not more than 5%, then your limit is up to 3 crore in 44AD. And in 44ADA, it will go up to 75 lakh instead of 50 lakh rupees. So we have two categories within 44AD now. The person whose transactions are more than 5% in cash will be having 2 crore. The person whose transactions are more than 5% will have less than 5% will have 3 crore. Similarly for 44ADA as 50 lakh and 75 lakh. Some moot questions. At the same time, let me also deal with some of the things which would have been appreciated by all of us and have not been done. So in the meeting with CBDT, which the chamber had, we had suggested to them that this 44AD and 44ADA, the position prior to 2017, assessment year 17-18, prior to 2017-18, the position was that the firms were allowed to have deduction of remuneration and interest to partners in addition to the whatever 6%, 8% which I am offering. Right now, come assessment year 17-18, the new sections have come into place, and therefore now we are not having a situation where we'll be able to claim the deduction under section under those remuneration and interest to partners. It is absolutely unfair to my mind because there is a serious case for one to reconsider this. They should have allowed that, and we had canvassed for that, but somehow that is not happening. One more thing in 44 AD, which we thought we should, we should seek that clarifications, seek that relaxation from them, is that 44 AD should not apply to speculative transaction and a F&O transaction. It's a very simple case that, because our institute's guidance note says that the turnover has to be determined in a particular manner vis-a-vis speculative transaction or F&O transaction, ignoring the minus sign and only comparing profit and loss and adding together. Now there are real life cases where it so happens that because of the determination of turnover in this particular manner, the person is in loss, but still it is considered to be his turnover, and therefore 44 AD once it gets invoked, he has to undergo audit. So unnecessary audits are being imposed upon on the assessee as well as chartered accountants. We are sure that it may be adding to the business for the chartered accountants, but we are sure that our fraternity does not need such business. We are absolutely clear that we are having lot many work to do on our end, and therefore we are not keen on doing such business which doesn't add much to our revenue, but also adds multiple things to our efforts at least. So, if that would have been done, it would have been better. But unfortunately, that part has not been touched upon, despite of the request made and despite of the understanding by them that yes, this is a correct position. Probably they left it for some better day to do. We are told that there will be common IT forms, so income tax return forms will be common. And we were told in one of the interactive meeting where the somebody from CBDT was also present. We were told that yes, it will be a simpler return. How far simpler return will be there is a matter of in the warm of the future, and one will have to see how it goes. But personally speaking, I don't have much hopes on that because this returns are always becoming so difficult for everybody. I'm sure that even the CBDT officers may not be able to fill up their own returns. So this is a big challenge actually. Anyway, let us wait and watch. 194N, some amendments are there where if a cooperative society withdraws money from bank, then the limit has been increased to 3 crore, etc. So far, so good. Some concession has been given. But the moot question again here is that whether 194N itself is the correct position, itself is the correct provision, because see, it's ultimately my own money I'm withdrawing from bank, and on withdrawal of money, my tax-paid money, why there should be a tax first of all. So we always have been understanding that income tax is a tax on income, and TDS is one of the mechanism of collecting that tax. If that is our understanding is correct, then why 194N should be there on the statute book at all? First of all, we have got one or two decisions of tribunal where the tribunal has taken a view. I think one of the High Court has also taken a view about constitutional validity. But as of now, probably they have not considered it appropriate to remove the section completely. Then 54 and 54F, again, there is a restriction on the amount of investment, and therefore more than 10 crore, somebody who is investing in 54 or 54F, and the investment is more than 10 crore, then we are told that the excess part will be ignored. So if I'm buying a house for 12 crore rupees, the 2 crore rupees will be ignored, only 10 crore. The amount is substantially big, 10 crore is also substantially big, and therefore we should not creep upon it, because ultimately if they are collecting tax from some wealthy people whose investment in a house is more than 10 crore, probably yes, the government may be justified in denying 54, 54F to such an assessee, and that also in excess of 10 crore. So nothing to creep upon, but yes, this is the point which we will have to understand. Finer issues, of course, Mr. Khariwal will deal with. One amendment which is to plug some of the decisions, and that is we are told very clearly now that cost of acquisition, section 48, there is an amendment. We are very clearly told that cost of acquisition will not include any deduction which I have already claimed either under clause 24, section 24, or under chapter 6A. So in past there have been cases where people have claimed deduction of interest on housing loan as a cost of acquisition. He claimed deduction once under house property, and again when he sells the property, he claims the deduction for the cost of the interest. And therefore now the section has been very clearly saying that, I mean, of course it is proposed, it says that such a interest will not be available as a deduction. Then yeah, in 44AD and 44AD, I'm sorry, I'm going a little backward again. 44AD and 44ADA, they have not removed, they have increased this limit from 3 crore and 50 lakh, etc. But let me tell you, in fact, that 44AD is not a section which normally people prefer because of this provisions. that you cannot get the deduction of your interest and remuneration to partners. And as far as 44 ADA is concerned, they are saying that 50% will be the amount which will be deemed to be the income of the assessee. Now, all of us as a professional know that 44 ADA, 50% is certainly not my income. If I am a chartered accountant who is earning more than 50 lakh rupees, or even say a decent amount, maybe 35, 40 lakh rupees in a year as my gross collection, then certainly my fees, my income portion is not 50%. It may be 25 to 30%, and we therefore recommended that it should be cut down to 25 to 30%. Somehow that has also fallen to deaf ear, and we are not having any amendment there. Ideally, it should go down to at least 30%. That is what our feeling is. We have been requesting that under 194J, the threshold of 30,000 rupees, which has been provided for long, many years back now, we have lived with this 30,000 rupees, the TDS and professional fees for all of us, in fact, is a peanut amount, and therefore it should ideally go to at least 1 lakh rupees. That is also not considered by anybody, despite of repeated representation on this. It is not going in the right direction, unfortunately. One more amendment, which I think was mentioned by Mr. Vakil when he was addressing, was about that joint CIT appeal will be now dealing with the appeal. And we are also told that even the present appeals, which are there before the CIT appeal, may also be transferred to, some of the appeals may be transferred to joint CIT. So far, so good. We are happy that the appellate mechanism will move faster. We are happy on that. But the worry is this, that ultimately they are dealing with an amount. So they are saying that if there is an amount below some threshold, it may be transferred to the joint CIT. Now, the legal issues, if the issue is a legal issue, though the amount may be small, but the issues are legal. I have my own doubts whether the joint CIT appeal will be the appropriate forum, whether they will be dealing with the legal issues in the correct manner in which it is required. And today the amount may be small, today the quantum may be small, but there might be a repetitive issue. Same issue might crop up in the subsequent year, and where the amount is higher. Now, in such a situation, a legal issue to be dealt by somebody who is lesser than a CIT appeal will be, something which probably doesn't go well, at least to me. I feel that the correct way to handle was that, to appoint more and more CIT appeal to expedite the process of completing the appeal before the CIT appeal, rather than giving these powers to the joint CIT appeal. Because we have seen even the CIT appeals dealing with some of the legal issues in not so great manner. Now, I mean, I should not use so many words, but we have seen, all of us, that how the appellate authorities are dealing with some of the legal issues. When it goes purport down to further to the joint CIT appeal, I think we are going to have some further difficulties in explaining our legal issues to them. Some 143(1), etc. will go at, and all those things. One more amendment is there in 142(2)(a), where we are now told that other than the valuation, they will be also having a power. The assessing officer will have the power to refer to cost accountants for some valuation of any costing, etc. And there are some amendments vis-a-vis inventory valuation. I think Naveen, you will deal with that very well. So that is also going to create some more problem. We'll have to, of course, go to the fine print, understand again and again as to whether it is hurting me, and if yes, what is the way in which I should look at it actually. So far, as far as the election budget is concerned, yes, the attempt has been made to deal with all the assessees who are smaller assessees, and therefore giving some concessions to somewhere here and there. But my only grievance is that, why only new regime? The same benefit should have been given to the old regime assessees also. But I think probably they are giving a clear-cut message that old regime is here to ultimately be parked actually. So please shift to the new regime. And we are also told that new regime is going to be the default regime now. So therefore, earlier we were opting in for new regime. Now we'll have to opt out for the new regime if by way of that Form 10, IE, etc. Earlier we were opting in to take the benefit of new regime. Now we'll have to opt out. One more thing which could have been done along on the same front is that they are giving an option to opt in, opt out. If I'm not having a business income on a year-to-year basis, I can opt in and opt out. Now, for business assessee, it is very difficult, because once you select the option, you will be always there. You cannot move out of it. So therefore, to an extent, again, an unfair thing, because I am not certainly in a position to anticipate as to what will happen maybe 5 years, 7 years down the line, whether I'll be going for a housing loan, and therefore, in that scenario, I'll be happy with the old regime. that opt-in opt-out should be available on a year-to-year basis, dehorse the income which I am having. So that is what my belief is that. But unfortunately, that has also not been discussed. A few of the other things which we thought they should do that they did not do. And Virag bhai, I have maybe a couple of more minutes. Yeah, so we have been seeking about some amendment in relation to deduction out of capital gains. So today my capital gains is chargeable to tax despite of the fact whether I have realized the money or not. And if at all I don't realize the money later on, my income is taxable and I'm not getting the corresponding deduction. So we had requested for one rectification provision in section 155 so as to provide that in such a situation I'll be able to get the rectification for those things. Unfortunately, that has not been considered. We have requested for increase in limit of 4713B. That has also not been considered. And about the penalty in underreporting and misreporting, there is always a confusion because just because my case has been classified as misreporting, actually it may be a case of underreporting, but it has been classified as a misreporting by the assessing officer only with the purpose of denying me the immunity benefit. And in such a situation also, when I travel down to the appellate authority, my right of immunity goes away. So we have requested that something should be done on this front. Unfortunately, here also probably our expectations have been ignored completely, and therefore one will have to live with what we are having. With that, I think, friends, lot many things can be said, but yes, as I said, these are just the first reaction, and I think Naveen ji has done better work. He might have studied the provisions in greater detail, so I would not take much of your time. Let me again express my sincere thanks to Virag bhai and also all the office bearers of all the association. Thank you so much.
Thank you so much, Ketan sir. We welcome CA Naveen Khariwal sir from Bangalore. We welcome you, sir. Thank you so much for accepting our invitation, sir. So, Ketan sir, let me give a vote of thanks first. You have covered very well in a limited time, entire given overview, and set the tone for Naveen sir to explain the provision and the finance bill and the direct tax provision and the highest number of changes, or we can say amendment through this bill 2023 in last 8 years, around more than 120 plus section amendment in this year. So Naveen sir will explain us in each and every one in detail in a 1 hour or so, or even more, around till 7:30 or so. So Ketan sir has set a right tone, and we are once again thank you so much, sir. Sir has accepted our invitation on just a one call. Sir has told that I will have a 15 minutes kind of session I can take on a day one. It's our privilege, sir. Thank you so much, sir, for the accepting invitation on behalf of all our joint organizations.
Thank you so much, Virag bhai. It has been a pleasure. Thank you so much. Looking forward to hearing from Naveen bhai.
Yes, thank you, sir. So now we all like to invite and hear CA Naveen Khariwal sir. So would like to first invite our friend CA Shah, who is now from Mumbai, to introduce CA Naveen Khariwal sir, and after that we'll listen to sir. So over to you, Mosam.
Thank you, Virag. Good evening, everyone. First of all, I would like to thank you, Virag, for giving me this opportunity. And I want to welcome you all. I know it's a very special seminar, especially it is on budget, and that too on the same budget day itself. So it's a very special, and actually I can say that the budget itself was very special because it is the last budget of the Modi government before the election. And overall, they have tried to cover all the provisions which are the growth oriented. According to me, it was a growth oriented budget, but unfortunately, salaried class people who are especially earning more than 15 lakhs, they must be slightly disappointed because for them, nothing new in the budget. Most of these laborate are the same for them, and no tax benefit for the person who is earning more than 15 lakhs. So in detail, Naveen ji will explain you all the direct tax provisions. So I would like to welcome you, Naveen ji. And just to give a brief introduction of Naveen ji, Mr. Naveen Khariwal, he's a CA and he's a partner in Mrs. H.K. Khariwal, Khincha and Company, and partner in MS Mrs. H.C. Khincha and Associates. He is a third generation chartered accountant in his family and specialized in direct tax from Bangalore. He is a member, he is and was a member of various committees. Example, the Direct Tax Committee of ICAI, New Delhi for the financial year 2021, FKCCI Bangalore, FAC Karnataka, etc. And not only that, he is a speaker in the various organizations and various seminars conducted by the various branch of ICAI. So with this brief introduction, I would like to welcome you, Naveen ji, and over to you. Thank you.
Thank you for your kind introduction. I can see dignitaries on my screen, starting from, on the top left-hand side of the screen. CA Virag Shah, founder, Connect Easy. Then I can see, Ketan Vajani sir, who is our immediate past president of CTC. And beside him, I can see Shri Anil Agarwal ji, President, Gwalior Tax Bar Association. And then when I come down to my left is the person who's introduced me, CA Mosam Darshan Shah. Thank you, madam, for your my kind introduction. And then I can see Advocate Rutul Arya ji, President, Tax Law Bar Association, Bhopal. So now, my dear friends, what this budget has in store for you, I can only, discuss to the extent I have managed to study. So if you see, there are, as Ketan Vajani rightly pointed out, there are 122 amendments made in this budget. So straight away, dwelling into the provisions upright, there are 122 amendments made in the budget. We cannot, at the look of it, I cannot decide, whether it was, it has an impact. How far is the impact now? Immediately, we cannot visualize it, but there is a devil in the fine print. As you go on analyzing, and as 1 or 2 days pass by, and when we sit and analyze clause to clause, and when we try to, reconnect several sections, then you can know, actually what would be the, the impact. In any case, as madam, was telling even before this budget, that basically I am also from middle class. I know the pressures which are being felt by the middle class, and I am sure, that she has not disappointed the middle class at all. Basically, she has not brought an increase in the tax rate at all. So basically, if you see, my dear friends, madam has fulfilled her promise. She did not tinker with the old tax rates, but she has made the new tax regime more, attractive to the common man, basically. And there is old tax regime. It continues side by side along with the new tax regime. So old tax regime, if you see, there are no amendments at all. It continues to be the same. There are some tinkering, around about 5 amendments in the new tax regime. We will go through. We will try to go through and try to complete as much as possible within the 1 hour time which is given. I have tried to prepare a PPT. I just share the PPT with the participants, and then we can move forward. Yes, sir. Is the PPT visible, sir?
Yes, sir. Screen is visible, sir.
Yeah. So let me just start my presentation. Yes. Yeah. Yes, sir. If you see the finance minister's speech, now, para number 132, what she is telling, my aim is to maintain continuity and stability of taxation. This is what the finance minister is telling. Honorable finance minister is telling, I would like to maintain continuity, stability of taxation, and also I will simplify and rationalize various provisions so as to, reduce the compliance burden, promote the entrepreneurial spirit, and provide tax relief to citizens. As it really happened in the budget, is now what we are going to, would be our endeavor to see it. Now, my dear friends, at the beginning of the budget, the finance minister, at the beginning of our direct taxes proposals, the finance minister made a statement telling that, this year, round about, 6.5 crores returns have already been processed. And in fact, 72 lakh returns where, the portal has the burden ability to take around 72 lakh returns in a day. Further, the average processing period has reduced from 93 days when compared to financial year 13-14 to 16 days now, which is, a fantastic achievement. 93 days in 13-14 to now just 16 days. So return filed today and getting processed within next 16 days. In fact, many of my clients have called up and we have filed the return today, and next day itself you are getting the refund. If you have filled up everything correctly, the PAN, Aadhaar, bank account is linked, nominated for refund, etc. Refund also falls into the kitty of the taxpayer on the very next day. Anyway. And again, the madam says that 45% of the returns were processed within 24 hours. I can vouch for it. Definitely, it has happened. Now, if you see the provisions related to direct taxes, those 122 amendments, they are, bifurcated under these 6 heads. Rates of income tax, socio-economic welfare measures, ease of compliance, widening and deepening of tax base, anti-avoidance, improving compliance and tax administration, rationalization of provision, and others. We will go in the same manner. How, the finance minister has made the amendment. These are all the various proposals for amendments, 122 amendments, which have been, bifurcated into these 7 heads. Now, personal income tax. Now, there are 5 amendments, my dear friends, and these amendments are only in the new regime. Yes, much awaited new regime, and she has done well. Nothing to done in the old regime. The old regime is kept as it is. Now, what are the 5 amendments done in the new regime? Rather, 5 proposals done in the new regime. The first one, as you know, my dear friends, under both the regimes, up to 5 lakhs, you need not pay any tax. There is 87A rebate. So up to 5 lakhs, you will get rebate and you need not pay a single penny of tax. Now, for that first amendment, what has madam done? Now, 87A, she's telling only for the new tax regime, I extend the income from 5 lakhs to 7 lakhs. So up to 7 lakhs, you need not pay a single penny to the government of India. That is the first amendment made vis-a-vis personal taxes. That will happen only under the new regime. So that rebate limit, what was 5 lakhs, the 12,500, which you remember our chartered accountant friend, brought in 2014. At that time, 12,500. He brought that, up to 5 lakhs. There was thumping of desks, thinking that income was exempt. It wasn't exempt, but there was a indirect way of making it exempt by giving it rebate under 87A. So now this 5 lakhs has been extended to rupees 7 lakhs only under the new regime. Proposal number 2. I told you 5 amendments regarding the new tax regime. What is the second proposal? Now, second proposal, my dear friends, this new tax regime, it had, 6 slabs. Up to 2.5 lakhs, it was nil. You're up to 5 lakhs, you are getting rebate, etc. Next 2.5 lakhs, 5%. Next 2.5 lakhs, 10%. Next 2.5 lakhs, it went on increasing every 2.5 lakhs. So this now, madam has tinkered with that, and the 2.5 lakhs has now become, first of all, those 6 slabs have now been reduced to 5 slabs, and 2.5 lakhs have now been increased. Exemption limit is increased to rupees 3 lakhs. So what are the new slab rate? Now, the new slab rate would be 0 to 3 lakhs is nil, 3 to 6 lakhs is 5%, 6 to 9 lakhs is 10%, 9 to 12 lakhs is 15%, 12 to 15 lakhs is 20%, above 15 lakhs is 30%. Welcome amendment. Now, with this, what happens? Earlier, how much I used to pay on 15 lakhs tax? Now, how much I am paying tax on 15 lakhs? What is the saving for a common middle class individual? We will see. Now, if you see, my dear friends, up to 9 lakh, if you up to 9 lakh now, it is only 10%. That means, meaning to say, I'm now going to pay an individual with income of 9 lakh will be required to pay only 45,000. This is only 5% of his or her income. 45,000 divided by 9 lakhs, just 5%. Earlier, what was happening? If you see here, earlier it was more because it was 2.5 lakhs, and then now up to 9 lakhs, she's telling it is only 10%. Thereby, you are going to pay only 45,000. Now, that if you see average, on an average, the rate of tax is just 5%. It is a reduction of 25% on what one would have paid earlier in the new tax regime. 60,000 rupees reduction of 25%. What was 60,000 now has become only 45,000. Similarly, an individual with an income of 15 lakh rupees would now be required to pay only 1.5 lakhs or 10% of his or income. A reduction of 20% from the existing tax liability of 1,87,500. So earlier, my dear friends, under the new regime, income of 15 lakhs, existing liability of 1,87,500, now reduced, and that reduction is around about 20%. It now comes to 1.5 lakhs. If you take the average rate, it's hardly 10%. Because now what she has done is she has compared our tax rate with other countries of the world. And then they have come to this conclusion that definitely some improvement, some tinkering was required, which they have done it. Now, you come to the third proposal. For the the new regime, all of you know, no question of any deduction. There was no standard deduction, no professional tax, no your HRA benefit, etc. No interest on borrowed capital. Nothing was there. No ATC, your ATC benefit, no ATD mediclaim, no ATTTA, senior citizen ATTTB, more than 50,000, etc. Nothing was there. Now she's telling, I will now allow standard deduction to the new tax regime now. So every salaried person with an income of say around about 15.5 lakhs will stand to benefit by 52,500. Okay. So that standard deduction also now it is allowed under the new tax regime. Now the fourth announcement, what she's doing is they have agreed here that our country for an individual, high net worth individual, highest tax rate in the world, along with your maximum marginal rate plus surcharge plus cess, it comes to 42.74%. Why? Because of the surcharge, above 5 crores. The surcharge is 37% above 5 crores of income. Now, welcome amendment, that 37% surcharge is now reduced to only 25% in the new tax regime. So this will result in reduction of maximum tax rate to around about 39%. So that 42%, which included surcharge of 37%. So surcharge of 37% now reduced to only 25% only in the new tax regime. So this would result in a reduction of maximum tax rate to 39%. Now, then the one more amendment what she's done is, long back in 2002 itself, what was then in 2002, non-government salaried employees, on the retirement, there was that exemption on leave encashment. So at that time, what was 3 lakhs has now been increased. The limit is increased to 25 lakh rupees. When the highest basic pay, see that 3 lakhs was what? When the highest basic pay in the government in 2002 was hardly 30,000 rupees per month. Now, with the increase in government salaries, I am now proposing to increase this limit to 25 lakh rupees. So now what she's telling, by default, this will become the default tax. The new income tax regime will now become the default tax regime, but you will have to opt in the return. You have to opt in the return whether you want to come under the old scheme, whether you want to come under the new scheme. And those, the other sections are similar. Once you come out, only in your life you are allowed to come out once, and you can come back again. That is only once it is allowed. Otherwise, you cannot come back. It is a one-way traffic. Now, so you can opt for this regime, and you can pay lesser taxes based on the scheme. But still, if you see, my dear friends, say income of 9 lakhs or 10 lakhs, suppose there is interest on borrowed capital, suppose there is ATC deduction, suppose there is ATD deduction, etc. We need to work out now. And you are a senior citizen or a super citizen, still that may, the old regime may become more beneficial. Anyway, so because of all these, what has happened is, the madam is telling direct taxes, I am going to lose round about 37,000 crore in direct taxes, round about 1,000 crore in indirect taxes, but I am mobilizing hardly 3,000 crore, that's all. So total revenue foregone is round about 35,000 crore annually. So this we discussed, debate under 87A, the amendment made from assessment year 24-25 onwards, in case of a resident individual in India, income what was not exceeding 5 lakhs is now not exceeding 7 lakh rupees. So therefore, that amendment is done. 115 BAC 1A. Now, you come to the next bifurcation, socio-economic welfare measures. So this is, a very timely amendment. This is also promoting timely payments to MSMEs. For example, any SSE makes a payment to MSME. So what we used to do, I am following accrual system of accounting, mercantile system of accounting, I am claiming exemption. The law is telling now nothing doing. I am inserting a clause H in 43B of the Act, saying what? My dear friend, you are making payment to MSME. Yes. Whether when you are making payment with MSME, have you got a written agreement or you don't have a written agreement? If you have a written agreement, time limit is 45 days. You don't have a written agreement, time limit is 15 days. For what? To make payment. So now you will not be allowed any deduction on accrual basis. For example, you made, the agreement was entered into say March, or you made purchases in March, fine. Now, with a written agreement, it is 45 days. Without no agreement, it is 15 days. So I could not make the payment up to March. So law is telling, don't worry, make the payment up to the date of filing return of income claim deduction. Now, there is section 15 of the MSME Act. What is section MSME Act for section 15 telling? Now let us see. Section 15 of the MSME Act mandates payments to all these MSMEs, what we discussed, within the time as per written agreement, which cannot be more than 45 days. And if there is no written agreement, section mandates that payment shall be made within 15 days. Therefore, they are telling that proposed amendment to 43B will allow the payment as deduction only on payment basis. Very simple. It can be allowed on accrual basis only if the payment is made within the time mandated under section 15 of the MSMED Act. So March, suppose you want to claim deduction for March 31st, then you are telling law, don't worry, you please make the payment within the time limit specified under MSMED Act. In any case, I will allow you deduction only on payment basis, which is fine. The next amendment. Now this is Agniveers. Well, what is this? This is for Ministry of Defense. They introduced one scheme called as Agnipath Scheme 2022 for enrollment of all these Agniveers in our armed forces, Indian armed forces. So government is saying like your pension fund, etc. Your pension scheme. They introduced one scheme. It is called Agniveer Corpus. So they are telling there is one Agniveer Corpus. All of you Agniveers, you please give contribution. You will also give contribution. Government of India will give contribution. On that contribution, I shall give you interest. So as and when you give contribution, you claim deduction. So this is the sum and substance. We'll go through this scheme. Nothing to worry. So the package given to an Agniveer from Agniveer Corpus Fund. Now Agniveer will also contribute. Government of India will equally contribute. And from there, distribution will be made to the Agniveer who contributed. That is called as Seva Nidhi. Package given to an Agniveer from Agniveer Corpus is called as Seva Nidhi. Now, I told you Agniveer Corpus Fund. This fund belongs to the Consolidated Fund of India. All the Agniveers, along with contribution from the Government of India, will be given. Plus, there would be interest on these contributions, which would be held in the respective accounts. Now, each Agniveer is contributed 30% of his monthly customized Agniveer package to the individual's Agniveer Corpus Fund. So government will also contribute a matching amount to the Agniveer Corpus Fund. Government will obviously also pay the interest to the Agniveer from time to time. Then after completion of 4 years, my dear friends, after completion of 4 years, Agniveers will be paid one-time Seva Nidhi package. What is that Seva Nidhi package? Nothing but my contribution, government contribution, including interest. So what I'm going to pay you after 4 years as Seva Nidhi package includes my contribution plus government contribution along with the interest. Now, again they are telling I am introducing a exemption section now 10 within bracket 12C, saying what? Any payment received from the Agniveer Corpus Fund by a person, Agniveer, enrolled under the Agnipath Scheme 2022 or the nominee of such fund shall be exempted from income tax. I am introducing one more section 80CCH, saying what? I am an Agniveer individual enrolled in the Agnipath scheme. I am subscribing to the Agniveer Corpus Fund on or after first day of number 22. If I am making a contribution, I shall be allowed a deduction of the whole of the amount deposited by me, and also the matching contribution deposited by the central government to my account in the Agniveer Corpus Fund from my total income. 80CCH, whatever I receive including interest, exempt under 1012C, I make a contribution. Yes, sir, please claim deduction 80CCH. And also new scheme and old scheme, everything you can go forward. Now, then if you see, One more new subsection they are telling, one more introduced under the head salary. This, what is it taxed? It is taxed obviously under that salary 17(1). Now they want to introduce one more subclause in 17(1), saying that the contribution made by central government in the previous year to the corpus fund shall be considered a salary of the individual. Same thing. Now, the new tax regime of 115 BAC, an individual enrolled in Agnipath scheme and subscribing to Agniveer Corpus Fund shall get a deduction of government contribution to his Seva Nidhi. Very important, sir. Even though you are coming, that Agniveer files written under the new taxation regime of 115 BAC, still, you know, because he is an Agniveer and he is enrolled in the Agnipath scheme, and after 1st of November 22, then he can claim a deduction for his contribution to the Seva Nidhi under 80 CCH subsection, 80 CCH subsection 2. Now, move forward. Now, this is again, you know, they are trying to reduce all this litigation. So the sugar factories, you know, especially sugar factories to sugar cooperatives from the past demand. So what has happened? Time to time, the government of India will chip in. You know, they are going to help, you know, the farmers, sugar farmers. So how they are helping? Cane price. The cane price is fixed. You know, FCP, final cane price. And there is SMP, statutory minimum price. There are FCP, final cane price. Then there is a statutory minimum price, which is fixed by the central government under your sugarcane control, etc. Now, FCP is decided on the basis of particular factory's working results, which will take into account all revenues and expenditure incurred by factory. Now, payment of final cane price by the cooperative sugar factories over and above the SMP. Statutory minimum price is fixed. Final cane price over and above the SMP has resulted in tax litigation. Department saying, I am not going to allow you the deduction of what? Of the sum over and above the SMP. This FCP, you paid FCP over and above the SMP. Over and above the SMP, whatever FCP is paid, I am not going to allow you as a business, because this fellow will tell, the sugar factory will tell, sir, I have paid the FCP, therefore I have claimed as business expenditure. Whereas in the scrutiny assessment, when you took it up for scrutiny, you have disallowed, saying that what? Excess price paid for purchase of sugarcane over and above SMP, is in nature of appropriation or distribution of profit, and therefore I am not going to allow you as a deduction. So now they are telling, I am introducing 3627 section 10(5), yeah, it is 17, 3617. I am introducing a new section 3617 hereby to amend subsection 1 of 36 to provide that amount paid for purchase of sugarcane by whom? By the cooperative societies engaged in manufacture of sugar at a price which is equal to or less than the price fixed by or fixed with the approval of government. It shall be allowed as a deduction for computing business income of the sugar of cooperative factories. Welcome amendment. So this they are telling, you know, amendment is from applicable from 1st April 16. That is by Finance Act 15. Now move forward. This is again an interesting amendment, you know, increasing threshold limit for cooperatives to withdraw cash without TDS. You know that. So that what are they telling? You know, suppose you are a non-filer, you know, 194N, that banking company or cooperative society, you know, they are engaged in carrying on business of banking or post office. At the time of payment of such sum in cash to any person, deduct an amount equal to 2% of such sum as income tax. And then, you know, the requirement to deduct the tax applies when? Only when the payment of amount or aggregate of amount in cash during the year exceeds 1 crore rupees. So now they are telling, if you are a cooperative, that 1 crore shall be substituted by the words 3 crores only. 194A proviso is inserted. That where the recipient is a cooperative society, only for cooperative society exclusively, that 1 crore limit, my dear friends, has now substituted by 3 crore rupees. Shall have effect as if for the words 1 crore, words 3 crores had been substituted. That's only for a cooperative society only. Next, there is one more amendment. This also it's only for cooperative societies. Be careful. You know 269SS, you know 269T. What is 269SS? No person shall take from any person any loan or deposit otherwise than by account pay check or account pay draft or online transfer through a bank account if amount of such loan or deposit is 20,000 or more. Similarly, 269T repayment, provide that no loan or deposit shall be repaid otherwise than by account pay check or account pay draft or online transfer if amount of such loan or deposit 20,000 or more. Okay, that is the basic section 269SS or T. For now, they are telling this representations have been received from whom? PAX and PCARD. PACS PAX, PCARD. What is PAX? Primary Agricultural Credit Society. Be careful. Don't tell me ABCD. I want only PAX and PCARD. Why? Because when these two entities, when these two entities take from any person loan or deposit or repay to any such person loan or deposit, the 20,000 limit is enhanced to 2 lakh rupees. Please, 20,000 limit is enhanced to 2 lakh rupees. Who are those two persons? PAX and PCARD. Who is a PAC? Primary Agricultural Credit Society. Who is a PCARD? Primary Cooperative Agricultural and Rural Development Bank. For your limits on cash transaction with banking companies, your 269SS and 269T. So please understand why. What is the work of this PAC and this PCARD? They are providing credit facilities, and so they are telling relaxation may be made. This is the intent and sum and substance of the provision. So therefore, to provide relief to low income groups, facilitate easier conduct of business operations in such areas, it has been proposed that an amendment may be made in the section 269SS by raising the limit of 20,000 to 2 lakh. Be careful, it should be a PAC or PCARD. Okay, fine. Now, let us go further, sir. Relief to startups in carry forward and setting off of losses. That startup, 80 IAC, etc. So what is 80 IAC, sir? 80 IAC will provide a deduction of amount equal to 100% of profits and gains derived from an eligible business by an eligible startup for 3 consecutive years out of 10 years from the year of incorporation, subject to what? Those 3 conditions. Turnover does not exceed 100 crores. Then, certificate of eligible business from Interministerial Board of Transfer, certification, and it is incorporated on or after 1st day of April 16, but before 1st day of April 23. Every budget they are extending the due date. Now also they are extending. Incorporated on or after 1st April 16, but before 1st day of April 23. Now this budget says what? 1 more year extension. It is now, up to 1st of April 2024. In order to further promote development of startups in India and to provide them with a competitive platform, it is now proposed to amend the provisions of 80 IAC so as to extend the period of incorporation of eligible startup to 1st day of 2024. That's all. One more amendment, my dear friends, with regard to 80 IAC is regarding section 79. What is section 79? You are carrying 79, restriction. Year in which you are incurred the loss, year in which you are setting off the loss, 51% of shareholding should remain same. Basically, what is it? Company in which public is company other than which company in which public is substantially interested. Simple. So now what are they telling? But some relaxation has been provided in case of eligible startup, which is referred to in 80 IAC. There they say the condition of continuity of at least 51% shareholding not applicable to the eligible startup if all the shareholders of the company as on the last day of the year in which the loss was incurred continue to hold those shares on the last day of the previous year in which such loss is set off. Additional condition, what was it? That under this relaxation, if it has been incurred, that loss incurred during a period of 7 years, beginning from the year in which such company is incorporated. Naturally, see, you are a startup. Beginning, they are telling you are giving me deduction. You are telling me claim 80 IAC. Starting 1st, 2nd, 3rd, 4th, there I may incur losses. Naturally, I will be incurring losses. Where is the question of me claiming the deduction, sir? So they are telling, don't worry. What was 7 years I allowed you, relaxation, to carry forward the loss. Loss is allowed to be set off only if it's incurred in period of 7 years. That is extended to now 10 years. One more amendment. So that 7 years with the period of 10 years contained in subsection 2 of 80 IAC, the time period for loss of eligible startups to be considered for relaxation is also proposed to be increased from 7 years to 10 years from the date of incorporation. Accordingly, what they have done, sir? They have amended, proviso to 79(1), saying that carry forward loss of eligible startups shall be considered for set off under this proviso if such loss has been incurred during the period of 10 years, beginning from the year in which company was incorporated. Now, conversion of gold to e-receipt and vice versa. It does not amount to transfer. Conversion of gold to electronic gold receipt does not amount to transfer, sir. It is proposed to exclude the conversion of physical form of gold into EGR, your electronic gold receipt, and vice versa by a SEBI registered vault manager from the purview of transfer for the purposes of capital gains. No problem. Now, tax incentives to IFSC. You know, IFSC gift city in Ahmedabad. There is nowhere else in India. That gift city IFSC is there only in a gift city in Ahmedabad. So a lot of exemptions and deductions have been given, incentives. So some more incentives have been given. Moving forward. Now there is one more interesting, exemption to development authorities, etc. 10 within bracket 46, you know. So what is this 10 within bracket 46? It provides exemption basically to any specified income arising to any body or authority or board or trust or commission. Now these authorities are what? Which have been established or constituted by under central, state or provincial act, and they should not be engaged in any commercial activity, and they are notified by the central government. Now recently there was a Supreme Court judgment in the case of Ahmedabad Urban Development Authority. We will only stick to what is reasonable, relevant for our amendment. Restriction on undertaking commercial activities by anybody or authority or board or trust or commission notified under section 1046 has been a litigated issue. Recently, Supreme Court in Ahmedabad Urban Development Authority, what it said, it debated on the meaning of the word commercial, saying that the word commercial has the same meaning as a trade, commerce, business in clause 15 of section 2 of the Act. Therefore, sums charged by such notified body, authority, board, trust or commission will require similar consideration, whether it is at cost with a nominal markup or significantly higher, to determine if it falls within the mischief of commercial activity. However, Supreme Court made a very fine distinction in respect of statutory authorities, this 1046, which have been established by the state government or central governments for achieving essentially public functions or services. In such cases, courts have held that the amounts or any money whatsoever charged for the public services are prima facie to be excluded from the mischief of business or commercial receipts, as their objects are essential for advancement of public purposes or functions. Therefore, in view of this judgment of Honorable Supreme Court, it is now proposed to make an amendment so as to include the income of body, authority, board, trust, commission, not being a company, from the scope of 10 within bracket 46, insert a new clause 1046A for their income. Now, what is 1046A? Now, the 1046A proposes to exempt any income arising to these 5 persons, which has been established by or under Central Act with one or more purposes, namely what? Dealing with and satisfying need for housing accommodation, planning, improvement, development of cities, town, villages, regulating and developing any activity for the benefit of general public, or regulating any matter for the benefit of general public arising out of the object for which it has been created, then income is exempt under 10 within bracket 46A. Now, move forward. 15% concessional tax to promote new manufacturing cooperative society. Finance Act 115 BAB has come. What was the amendment, sir? All new manufacturing domestic company set up, incorporated on or after 1st of October 19, which commenced their manufacturing or production activity by 31st of March 23. And these companies do not avail any deduction, any exemption, any incentive, can opt to pay tax under the concessional rate of 15% only. Roundabout after surcharge, education cess, etc., it comes to 17.14%. And for other than manufacturing companies, the rate of tax was 22% plus surcharge cess, etc., will come to 25.14%, whatever. So this provision was not allowed for a manufacturing cooperative society. So in order to provide a parity, in order to provide a level playing field between whom? Between the new manufacturing cooperative society and new manufacturing companies. So by providing for concession tax regime of 15% to new manufacturing cooperative society as well. Therefore, section 115 BAE is inserted in the Act. Ditto provisions, sir. What are the the provisions, or what are the conditions? Ditto conditions. Whatever was there in 115 BAB. So it should be a new manufacturing cooperative society. What is it? There is no question of the total income of that new manufacturing cooperative society shall be computed without claiming any deduction under, you know, whatever your 33AB, 10AA, etc. without claiming any deduction, without set off of any loss carry forward or depreciation from earlier assessment year. If such loss or depreciation attributed to any of the deduction referred to in 2A above, then by claiming, you know, depreciation if any under 32, then, you know, option is exercised by the person in the prescribed manner on or before the filing, before the due date of return under 139(1). Then option so exercised, it cannot be withdrawn. Then the income which has neither been derived from or nor is intended to manufacturing production, if it is this income of cooperative society, it's not relating to the manufacturer, then what will happen? Very simple. You pay tax rate of 22% and no deduction or allowance in respect of any expenditure allowance shall be made in computing such income. So almost similar provisions. Now, regarding this preliminary expenditure, they say ease of compliance. Next amendment, ease of compliance is in claiming deduction on amortization of preliminary expenditure. You know, 35D provides for amortization of preliminary expenses which are incurred what? Prior to commencement of business. Prior to commencement of business or after commencement in connection with the extension of the business or extension of a new project or extension of the new undertaking. So you know that expenses in regard to feasibility report, project report, etc. Now, in order to ease the process of claiming amortization of these preliminary expenses, it is now proposed to amend 35D, you know that 155 years. Now proposed to amend 35D of the Act to remove the condition of activity in connection with these expenses to be carried out by a concern approved by the board. Instead, the assessee shall be required to furnish a statement containing particulars of this expenditure within prescribed period to the prescribed income tax authority in the prescribed form and manner which they are going to come out with. So very simple is telling no. Earlier, you know, this section, what it provided, work in connection with preparation of feasibility report or project report or conducting of market survey, any other survey or any other engineering services would need to be carried out either by the assessee himself or by concern approved by the board. Now they are telling in order to ease the process of claiming amortization, I am now proposing to amend 35D to remove the condition of activity in connection with these expenses to be carried out by a concern approved by the board. Instead, the assessee you only give one statement. Assessee shall be required to furnish a statement containing the particulars of this expenditure within the prescribed period to prescribed authority in the prescribed form in the prescribed manner. Next amendment. What about this presumptive taxation scheme? Very simple amendment, sir. They are telling what was your presumptive taxation scheme for a businessman, 2 crores, 8% or 6% as the case may be. Turnover is 2. For a professional, 44 ADA, 50 lakhs, so 50%. Now they are telling that 2 crores and that 50 lakhs limit of turnover, I am increasing. How much, sir? 3 crores, 75 lakhs. 3 crores for a businessman, presumptive income, and for a professional, that 50 lakhs has become 75 lakhs. With the additional rider, sir, it was not there in the earlier section. Now it's telling, provided 95% of the turnover, 95% of the receipts is in non-cash mode. Very simple. Only 5% cash mode. Now, 2 provisions are mixed up. Don't get confused. Earlier, so if, my dear friend, listen carefully. Suppose your turnover is what the 2 crores become 3 crores, or you know this 50 lakhs become 75 lakhs. So in that 44 ADA and 44 ADA, and in 44 AB also, 44 AB what is there? That 95% of receipts, etc. That will also continue to be there. This 44 ADA and this 44 ADA, here it is 2 crores has become now 3 crores, and the 50 lakhs has become 75 lakhs, subject to 95% of the receipts in non-cash mode, only 5% in cash. So what are they telling? Representations have been 44 AB, that is always there, sir, 95% always. That limit is what? 10 crores there. That limit is already 10 crores there. In case of a person carrying on profession required to get audits with gross rates profession exceeds 50 lakhs, those opting for and fulfilling the conditions laid in presumptive scheme are exempted from audit under the section. Representations have been received for increasing thresholds for eligibility of availing benefit of presumptive scheme for eligible business and profession in order to benefit more persons in the small and medium segment. Therefore, what the government is saying, I want everything in digital mode. Receipt, digital receipt. Payment, digital payment. So you want to make digital payment, digital receipt, welcome. Your turnover I'm increasing. 2 crores become 3 crores, 50 lakhs become 75 lakhs. Thereby, here 50%, here 6% or 8% as the case may be. Representations have been received for increasing the threshold for eligibility of availing benefit of presumptive scheme for eligible business and profession in order to benefit more persons in the small and medium segment. In order to ease compliance and to promote non-cash transaction, it is now proposed to increase the threshold limit for presumptive taxation in 44AD and 44ADA on fulfillment of certain conditions. Therefore, it is now proposed to provide that 44AD for eligible business where the amount or aggregate of amounts received during the year in cash does not exceed 5%, threshold limit of 3 crores will apply. Under 44ADA for professions referred to in subsection 1 of 44AA, where the amount or aggregate of amount received during the previous year in cash does not exceed 5% of the total gross receipts, a threshold limit of 75 lakh rupees will apply. Receipt by check drawn on a bank or by account pay by a bank draft, which is not account pay, shall be deemed to be received in cash. Yes, this is also clarified. If it's not an account pay check, account pay bank draft, that means what? It is deemed to be received in only in cash. Provisions of 44AB shall not apply to the person who declares profits and gains for the previous year in accordance with the provisions of subsection 1 of section 44AD or 44ADA1 of the Act as the case may be. Move forward, sir. Extending the scope for deduction of tax at source to a lower or nil rate. 197, relates to certificate of lower deduction or nil rate. Lower deduction or nil rate. You are all applying that form 13. You have to apply online only now. You apply online form 13. Then you take a copy and you file it in the assessing officer also TDS returns. Online only they are going to ask you all the questions. Online only you have to submit all the details. So either it is nil rate or at a lower rate. Then for what all you can apply for your form 13 lower deduction 192, 193, 194, go on. Now, if the assessing officer is satisfied that the total income of the recipient justifies deduction of tax at a lower rate or nil rate or zero rate, then he will give me appropriate certificate to the assessee. It will be uploaded. Now, this benefit is also given to 194 LBA. What is it? Business trust. What is 194 LBA? Business trust will deduct and deposit tax at the rate of 5% on the interest income of the non-resident unit holders. So representations have been received that in some cases rate of deduction may be required to be reduced due to some exemption. For example, exemption under section 1023 FE of the Act allowed to notified sovereign wealth funds and pension funds. But that 194 LBA is not mentioned in 197. Therefore, that benefit of exemption was not available at the time of tax deduction. Now they are including it. Now they are amending 197(1) to provide that the sums on which tax is required to be deducted under section 194 LBA shall also be eligible for certificate of deduction at a lower rate. Fair enough. Now, widening and deepening of tax base anti-avoidance, extending deeming provision under section 9 to gift to non-ordinarily resident. What is 9(1), sir? 9(1) is a deeming provision which provides for different types of income which are deemed to accrue or rise in India. Now, Finance Act 19 inserted subclause 8 in 918, saying that any sum of money exceeding 50,000 rupees received by a non-resident without consideration from a person resident in India shall be deemed to accrue or rise in India. Sum of money, it is referred in 224, 17A. Now, the above amendment was introduced as an anti-abuse provision as certain instances were observed where gifts were being made by person residents in India to non-residents and were claimed to be non-taxable in India by such non-residents. It has come to notice that certain persons being not ordinary resident are receiving gifts from the persons resident in India and they are not paying tax on it. Yes. Therefore, they are telling, I am going to make an amendment in 918 so as to extend this deeming provision to a sum of money exceeding 50,000 rupees received by a not ordinary resident without consideration from a person resident in India. Now, move forward. Removal of exemption from TDS on payment of interest on listed debentures to a resident. 193. provides for TDS on payment of any income to a resident by way of interest on securities. So proviso to 193 provides for exemption from TDS in respect of payment of interest on certain securities. Clause 9 of the proviso to 193 says that no tax should be deducted in case of interest is payable on any security issued by a company where such security is in demat form and it is listed on a recognized stock exchange in India. So therefore, when you are telling that no tax should be deducted, the person, the recipient of interest income, he gets encouragement, or he's encouraged to not to show that interest income. Anyway, you are telling me there is no TDS. So therefore, they are telling I am going to omit that clause 9 because of the underreporting of interest income by the recipient because of the TDS exemption. Therefore, that clause is going to be omitted, and now there will be deduction of TDS. Move forward. TDS and taxability on net winnings from online games. What is 194B? You know, sir, any winnings from lottery or crossword puzzle or card game, any other game of any sort, of an amount exceeding 10,000 rupees shall at the time of payment thereof deduct income tax as per the rates in force. What is 194BB? That is your race horses. Race horses in any race course, or for arranging for any wagering or betting in any race course. What is 115BB? Used to provides for the rate of tax on winnings from lotteries, crossword puzzles, including horse races, card games, games of any sort, or gambling or betting in any form or nature. Now the deductors, what they are doing, sir, they are deducting tax on 194B and BB by applying threshold of 10,000 rupees per transaction and avoiding tax deduction by splitting a winning into multiple transactions each below 10,000, which is against the intention of the legislature. Now again they are saying there is an online rise in your online games. Recently there is a spike in the users of online games. So now they are telling we want to bring in specific provision regarding TDS and taxability of online games due to different nature being easily accessible on the internet and computer resources, variety of playing option and payment option. So now they are telling I am going to amend first of all 194B, 194BB, saying what? The deduction of tax under this section shall be on the aggregate of amount, on the amount or aggregate of amount exceeding 10,000 rupees during the financial year. Then amend 194B of the Act to include gambling or betting of any form of nature whatsoever within scope. Amend 194B of the Act to exclude online games from the purview of the said section from 1st of July 23. Why? That online game new section is introduced, 194BA. So this online game goes out of 194B, enters new section 194BA, which is proposed to be introduced for TDS on winnings from online games from that date. So that is after with effect from 1st of July 23. Now continuing the same fashion, they want to now insert a new section 194BA with effect from 1st of July 23 to provide for deduction of tax at source on net winnings in the user account at the end of the financial year. So in case I told you the word net winnings in the user account, in case there is withdrawal from user account during financial year, income tax shall be deducted at the time of such withdrawal on the net winnings comprised in such withdrawal. In addition, income tax shall also be deducted on the remaining amount of net winnings in the user account at the end of financial year. Net winnings shall be computed in the prescribed manner. They will be given. To provide that in the proposed section 194BA, in case the net winnings are wholly in kind, partly in cash, partly in kind, but part of cash, is not sufficient to meet liability of deduction of tax in respect of whole of the net winnings, person responsible for paying shall, before releasing the winnings, ensure that the tax has been paid in respect of the net winnings. On this, my dear friend, important amendment is made in budget 2024 on these guys, where it is partly in cash, partly in kind. There was no penalty, no prosecution. Now, even on such guys, by budget of 23, penalty and prosecution is now levied even on such persons. To provide that if any difficulty arises, fine, giving effect to provisions of new section 194BA, board may with the prior approval of central government issue guidelines for purpose of removing the difficulty, etc. Now, So I told you new section is introduced, and 194 BBJ with regard to tax on winnings from online games. How to calculate the tax? Shall be payable, shall be the aggregate of amount of income tax calculated on the net winnings from such online games during the previous year, computed in the prescribed manner at the rate of 30%, and the amount of income tax with which the assessee would have been chargeable had its total income been reduced by the net winnings referred to above. Now increasing the rate of TCS of certain remittances. So you know what is the 206, TCS, the trading in alcohol, liquor, forest, scrap, etc. 206C 1G provides for TCS on foreign remittance through your liberalized remittance scheme on sale of overseas tour package, LRS. Now these are the proposals made under this budget, current and proposed TCS rates. They want to increase the TCS on certain foreign remittances and sale of overseas tour packages. Amendment is proposed in 206C 1G specifically. Earlier they are telling what was it? For the purpose of any education, amount of loan remitted is out of loan. Amount remitted outside of India is out of a loan obtained from any financial institution as defined in 80E. What is the present rate, sir? 0.5% of the amount or aggregate of amounts in excess of 7 lakhs. 7 lakhs was the limit. So 0.5% in aggregate of 7 lakhs. There is no change, sir. Don't. Then other than education, for purpose of medical treatment, I am remitting funds abroad. That is 5%, not 0.5. For purpose of education other than 1 or for purpose of medical treatment. Other than 1 means what? What is 1? Out of loan obtained. I have taken loan from financial institution. I am funding my daughter. My daughter is going abroad. I have taken loan from financial education institution. I am funding her education abroad. Therefore, what was the TCS? 0.5% of the amount in aggregate of 7 lakhs. Now I am funding from my own. I am not funding out of a loan obtained from any financial institution. Law is telling, present law is telling 5% TCS in excess of 7 lakhs. No change in these two. Overseas tour package, my dear friend, change. What was the present rate? 5%, and there is no question of any threshold limit of 7 lakhs there. Overseas tour package 5% without threshold limit. Increase to 20% without any threshold limit. There I think the common man is what made the finance minister, I don't know. Anyway, there was a trail. Anyway, to that extent, audit trail was there for 5%. Anyway, my humble or suggestion was they could have at least 5% or made 7.5% or 10%, but the steep rate of 20%. So in that case, what we have to advise the client is you don't pay advance tax, you don't pay TDS, etc., self-assessment tax. The 20% you can claim there. 5% without any threshold limit. Now it is 20% without any threshold limit. In any other case, what was 5% of the amount or aggregate of amounts in excess of 7 lakh has now become again 20% without any threshold limit. So for education and other than education, for medical treatment, it is still continued to remain 0.5 and 5%. For overseas tour package, what was 5% in other cases also, what was 5% has now gone to 20% and without any threshold limit. This from when it will applicable, sir, amendments? 1st of July 2023. Be careful. Now, this is again, the finance minister, as she told, I am understanding, I am also from middle class background. I understand the pressures of middle class. You are a high net worth individual. You are selling a house, investing in a house. You are selling some gold jewelry, investing in a house. You are selling shares, investing in a house. What is the sale consideration? What is the cap? 1 year before the date of transfer, 2 years after the date of transfer, within 3 years from the date of transfer, purchase a house. Within 1 year before the date transfer, purchase a house, or within 2 years from the date of transfer, investment in a house, or within 3 years from the date of transfer, you purchase a land, construct a house. All fine, sir. 54F. 54F is other than a residential house. 54 is residential house. Now, what is she telling? Why was 54F introduced? To mitigate the acute shortage of housing and to give impetus to the house building activity. Now it is observed that the huge deductions are being claimed by high net worth, high HNIs, high net worth individuals. You are purchasing very expensive residential houses, and therefore the intent and the sum and substance of the very provision is defeated. Now I am going to put a limit on the maximum deduction that can be claimed by assessee under 54 and 54F to only rupees 10 crores. Yes, now the limit is 10 crores. So even capital gain account scheme, by default, capital gain account scheme is also 10 crores. 54F, capital gain account scheme. Everything only 10 crores, sir, now. Cost of new asset purchase is more than 10 crores. Cost of the asset shall be deemed to be only 10 crores. Both. Consequentially, I told you, even capital gain account scheme, 54 subsection 2, 54F subsection 4, which deals with capital gain account scheme, all even there also amendment is done. Again, for the purpose of deposit, insert a proviso to provide that with the provisions of subsection 2 of 54F4, which we discussed, for the purpose of deposit in capital gain account scheme, shall apply only to capital gains or net consideration, as the case may be, up to rupees 10 crores only. Matters. Applicable from 1st day of April 24 and shall accordingly apply in relation to assessment year 24-25 and subsequent assessment years. Now, market linked debentures. Special provision for taxation of capital gains in case of market linked debentures. What is market linked debenture? So those are also listed securities. How are they currently being taxed at long-term capital gain at 10% without any indexation? However, the underlying asset here, these securities basically, they are in nature of derivatives, which are normally taxed as applicable rates, and they are giving variable interest as they are linked with the performance as per the market. Now, in order to tax the capital gain arising from the transfer or redemption or maturity of these securities as short-term capital gain at the applicable rates, it is proposed to insert a new section 50AA in the Act to treat the full value of consideration. 50AA is introduced, sir. Treat the full value of consideration received or accruing as a result of transfer or redemption of on the maturity of market-linked debentures as reduced by cost of acquisition of debenture and expenditure incurred, in connection with the transfer or redemption as capital gains arising from transfer of a short-term capital asset. So they are telling what is market-linked debenture. It is defined as per the SEBI. It's regulated by SEBI and as per the SEBI Act. Security, by whatever name called, has an underlying principal component in the form of a debt security. Returns are linked to, I told you, market returns only on other underlying securities, and includes any securities classified or regulated as a market-linked debenture by the Securities and Exchange Board of India. Very interesting section, sir. Preventing permanent deferral of taxes through undervaluation of inventory. Now, so there is ICDS 2. Government has already notified ICDS 2 relating to valuation of inventory. And the section 148 of Companies Act 2013, it mandates maintenance of cost records and it's audit by cost accountant in some cases. So now 142. What is 142? 142 is inquiry before assessment. Now, there is an amendment in section 142 relating to inquiry before assessment, which specific impetus only on inventory. 142.1 now will be amended to include. It will enable the AO to direct the assessee to get the inventory valued by a cost accountant nominated by the principal chief commissioner of income tax or chief commissioner or principal commissioner. Then assessee is required to furnish the report of inventory valuation in the prescribed form duly signed and verified by such cost accountant. To provide the expenses of and incidental to such inventory valuation, including remuneration of cost accountant, obviously will be determined by the principal chief commissioner or chief commissioner or principal commissioner or commissioner in accordance with prescribed guidelines. Then to provide that except where assessment is made under 144 of the Act, your ex parte assessment or best judgment assessment, assessee will be given an opportunity of being heard in respect of any material gathered on the basis of such inventory valuation which is proposed to be utilized for the assessment. Who is a cost accountant? As per Cost and Works Accountant Act 1959. Now, consequential amendments are also made. That time limit when they call for inventory valuation and till the date of submission of that report, that period is extended when you are going to make the assessment. exclude the period for inventory valuation through the cost accountant for purposes of computation of time limitation. And then to amend 295 of the Act. 295 is power to make rules, so as to include in the aforesaid section the power to make rules for the form of prescription of report of inventory valuation. It shortly be notified what is the form, what is the report, what are the particulars contained in the report, etc., etc. Now, one more interesting amendment. They say rationalization of exempt income under life insurance policies. So, you know, this 1010D section is already there, and last year also certain amendments were there regarding ULIP. So what was 1010D? It provides an income tax exemption on the sum received under a life insurance policy, including bonus on such policy. What was the condition, sir? There is a condition that the premium payable for any of the years during the term of policy shall not exceed 10% of actual capital sum assured. Then what will happen? It will be exempt. Now, legislative intent of providing exemption in 1010D has been to provide for the welfare objective by subsidizing the risk premium for an individual's life and providing benefit to small and genuine cases of life insurance coverage. However, they say over the years, it has been observed that several HNIs are misusing the exemption provided under clause 1010D by investing in policies having large premium contributions, as it is acting as an investment policy, and they are claiming exemption on the sum received under such life insurance policies. So now what they want to do? You know, I told you Finance Act 21, they made an amendment. But what was it, sir? It was only with respect to your ULIP. That too, on that it was fully exempt. What was the amendment? That ULIP issued on or after 1st of February 21 shall not be exempt if the amount of premium payable for any of the previous years during the term of policy exceed 2,50,000. You know that amendment is done. It was also provided that the premium is payable for more than one ULIP issued on or after 1st of February 21. Exemption under the said clause shall be available only with respect to such policies where the aggregate of premium does not exceed 2,50,000 for any of the previous years during the term of any of the policy. So after the enactment of the above amendment, the ULIPs having premium payable exceeding 2.5 lakhs have been excluded from the purview of clause 1010D. Only ULIP. All other kinds of life insurance policies are still eligible for exemption irrespective of amount of premium payable. Now, because of this misuse, to curb this misuse, it is now proposed to tax income from all insurance policies other than your ULIP, because for that provision is already there, 2.5 lakhs. They are telling all the insurance policies on this earth other than ULIP having premium or aggregate of premium above 5 lakhs in a year. Above 5 lakhs in a year, everything is taxable, sir. No question of any exemption. Income is only proposed to be exempt when, sir? Obviously only on the death of the person. Otherwise, this income will be chargeable to tax under the income from other sources. It is not only for ULIP. They say ULIP I brought in Finance Act 21, 2.5 lakhs. Now I'm telling for all other policies other than ULIP, insurance premium 5 lakh rupees will be taxable under the other sources. Deduction shall be allowed for the premium paid if such premium has not been claimed as a deduction earlier. Very simple, sir, and it is, you know, correct way. On maturity, I am receiving some amount. I have not claimed deduction earlier years under ETC. They are telling no problem. Whatever premium you paid, you reduce now. I have no problem. So this provision, don't worry, it will not apply now. Shall apply only for policies issued on or after 1st of April 23. Okay. This provision shall apply only for policies issued on or after 1st April 23. So now, you know, there will be, you know, a lot of policies made before this 31st of March 23. Because before 31st March 23, there is no question of any change in taxation for policies issued before this date. Now, hence, now there is a 6th proviso to 1010D. These are the amendments made now. 6th proviso to 1010D saying that nothing contained in this clause shall apply with respect to any life insurance policy other than ULIP issued on or after 1st day of April 23 if the amount of premium payable for any of the previous year during the term of policy exceeds 5 lakh of rupees. Again, I am inserting the 7th proviso of 1010D to clause 1010D saying that If the premium is payable by a person for more than one life insurance, I am telling I am going to split. Oh, I am very intelligent chartered accountant. 5 lakhs, split it. Make 5 policies. You want 10 lakhs, make 5 policies, 2 lakh, 2 lakh, 2 lakh. They are telling nothing doing. I am going to take the aggregate of all the policies. Then 8th proviso, saying that the provisions of 4th, 5th, 6th and 7th proviso shall not apply to any sum received on the death of the person, obviously. Then 56 to 13. I told you, how is it taxed? Under the other sources. What is the chargeability, sir? Other sources? 56. So introduce amendment there also. 56 to within bracket 13. 56 to 13. Saying that any sum is received, including bonus, including the sum allocated by way of a bonus at any time during the previous year under life insurance policy, which is not exempt under 1010D. Sum so received as exceeds the aggregate premium paid during the term of the such life insurance policy shall be chargeable to tax under the other sources. If the premium paid has been claimed as deduction in either provision of the Act, such premium will not be reduced from the sum so received. Commutation mechanism shall be prescribed. This would not apply to ULIP or keyman insurance policy whose taxation is governed by other existing provisions of the Act. Move forwards. Alignment of provisions of 45(5)(a) with TDS provisions of section 194 IC. What is your 45(5)(a)? You know, capital gain. Arising to whom, sir? 45(5)(a)? Arising to an individual or HUF. From what, sir? From transfer of a capital asset, being land or building or both, under a joint development agreement. When will it be taxed? Capital gain shall be chargeable to tax as the income of the previous year in which OC or CC, certificate of completion or occupancy certificate, either for the whole or part of the project, is issued by the competent authority. Okay. So for computing the capital gains, full value of consideration shall be taken as stamp duty value as increased by consideration received in cash. Please understand. Full value of consideration shall be taken as stamp duty value of his share as increased by consideration received in cash. But what was the, the inference of all the experts and taxpayers? Taxpayers and, they were, the experts were under the opinion that any amount of consideration received in a mode other than cash, that is check or electronic payment mode, would not be included in the consideration for the purpose of computing capital gain chargeable 45(5)(a). So this is, they are telling, the law is telling, no, this is not the intention. This is not at all the intention of the law, not at all the intention of the revenue, which is evident from provisions of 194 IC TDS provisions, which provides that tax shall be deducted on any sum by way of consideration other than kind under the agreement referred to in 45(5)(a), paid to the deductee in cash or by way of issue of check or draft or any other mode. Therefore, they are telling we want to amend the provisions of 45(5)(a), saying that full value of consideration shall be taken as the stamp duty value of his share as increased by any consideration received in cash or by check or draft or any other. Please move forward. Prevention of double deduction claimed on interest on borrowed capital for acquiring, renewing, reconstructing property. Very good. Now I am claiming interest on borrowed capital 24B. Very good. I purchased a property and I took a loan. I am paying the interest, etc. It may be for acquisition or for renewing or reconstructing. Fine. When I purchase the property, what I am doing? I am also claiming that stamp duty, etc. under 80C. Am I claiming under 80C? You are telling now the law is telling some assessees and you paid that interest on borrowed capital. Few people of them, they may debit to capital account or they may capitalize in the balance sheet also that interest on borrowed capital to the cost of the building. They are claiming on 24B. But you at the time of sale, you also want to claim interest on, the loan borrowed as cost. What the law is telling? Many people, you have been claiming double deduction of the interest paid on borrowed capital for acquisition, renewal or reconstructing property. First, it is claimed in the form of deduction from income from house property on section 24. and in some cases deduction is also claimed under other chapters of Chapter 6A, under provisions of Chapter 6A of the Act. Secondly, while computing the capital gains on transfer of such property, the same interest also forms part of cost of acquisition, what I told you, or cost of improvement under Section 48. Now they are telling no question. I am, in order to prevent you from claiming this double deduction, I am now inserting a proviso after clause 2 of Section 48, so as to provide that the cost of acquisition or the cost of improvement, cost of acquisition or the cost of improvement shall not include the amount of interest claimed under Section 24 or Chapter 6 matters. So cost of improvement shall not include the amount of interest claimed under Section 24 or under Chapter 6A of the Act. Move forward, sir. Defining the cost of acquisition respect of certain assets for computing of capital gains. Now you know that cost of asset is there in Section 55. So cost of improvement is there, cost of acquisition there, etc., etc. There are certain intangible assets, you know, or there may be certain rights also for which there is no consideration paid for its acquisition. But the memorandum is telling cost of acquisition of such assets is not clearly defined as nil in the present provision. Therefore, a lot of disputes in the courts. Since there is no specific provision which states that the cost of such assets is nil, the chargeability of capital gain from transfer of such assets has not found favor with courts. Therefore, to define the term of cost of acquisition and cost of improvement of such assets, it is now proposed to amend the provisions of subclause 1 of clause B of subsection 1 and clause A of subsection 2 of 55, so as to provide that the cost of improvement or cost of acquisition of a capital asset, being an intangible asset or any other right, intangible asset or any other right, other than those mentioned in the said clause or clause as the case may be, shall be nil. Now, introduction of authority of Joint Commissioner Appeals. So you know, CAIIB appeals, NFAC. Last 2 years, we are filing appeals with National Faceless Appeal Center. Cases are not taken up. Hearing the poor CAIIB appeals is heavily burdened. So therefore, they are telling, now I am going to appoint Joint Commissioner of Income Tax as Joint Commissioner Appeals now, because it's heavily burdened, is not able to pass the orders, is not able to take the case for hearing. I am now making 100 JCITs. I am now going to create a new authority, Joint Commissioner or Additional Commissioner. For what? To handle for appeals involving, they will come out, they will tell small amount of disputed demand, which the Joint Commissioner or Additional Commissioner will become appellate authority. It was there, sir, earlier when 246. Earlier it was there. Joint Commissioner Appeals. We used to file Deputy Commissioner Appeals. That was now removed, and there is only CAIIB Appeals. What was the power of CAIIB Appeals? CAIIB Appeals has the power to confirm, reduce, enhance, or annul or cancel an order of assessment or an order of penalty, but he cannot confirm, reduce, enhance, annul, or cancel an order of assessment or an order of penalty after providing an opportunity of being heard to the assessee and the assessing officer. The order passed by CAIIB appeals are appealable before the appellate tribunal. In order to clear this bottleneck, they are telling because of the pendency and because they are overburdened, new authority for appeals is being proposed to be created at Joint Commissioner, Additional Commissioner level to handle certain class of cases involving small amount of disputed demand. Such authority shall have all the powers, responsibilities, and accountability similar to that of Commissioner Appeals with respect to procedure of appeals. As I told you, the Deputy Commissioner Appeals was discontinued in 2000 itself. So it is now proposed to substitute 246 of the Act to provide for appeals to be filed before Joint Commissioner Appeals now. Now, move forward. Rationalization of appeals filed to appellate tribunal. So 253, these contain the provisions relating to filing of appeals to the appellate tribunal. 253 subsection 1, what it gives? List of orders which are appealable before the ITAT. list of orders. So that subsection provides what? That 253(1). Any SSC agreed by any order passed by CAIIB appeals under section 154, under section 250, 270A, 271, 271A, 271J or 272A may file appeal to tribunal. Okay. Therefore, tribunal is the first level of appeal for such orders of commissioner appeals. Sir, 271AAB, 271AAC, 271AAD, where are they mentioned here? Are they mentioned here? 271AAB, 271AAC, 271AAD. What is 271AAB? And what is 271AAC? 271AAB is in the penalty for where search is initiated 132. 271AAC is what? Where the assessing officer makes an addition in section 68, 69, 69A, B, C, D, etc. Your cash credit, etc. But explained investment, etc. What is 271AAD? Imposition of penalty by assessing officer if you found that the books of account maintained by any person, there is a false entry or omission of any entry which is relevant for computation of total income of such person to evade tax liability. So, Wide Finance Act 22, what has happened is, I told you, 271AAB, AAC, AAD were amended to enable CAIIB appeals also to pass an order imposing penalty under the said section. So, CAIIB appeals could pass an order, sir. They could levy penalty. Last year, amendment was made. CAIIB appeals only. 271AAB, 271AAC, 271AAD, CAIIB appeals was given the authority. You, sir, you can pass an order imposing penalty. No problem. But once you have passed the order by CAIIB appeals, I have to file appeal before the tribunal. So that is not mentioned. Those three sections were not mentioned in 253 subsection 1. Reference of the same has not been inserted in 253(1). Aggrieved assessee cannot file appeal against such penalty orders passed by CAIIB appeals, which may lead to taxpayer grievance. Therefore, it has been proposed to amend the provisions of 253 to provide that appeal against penalty orders passed by CAIIB appeals under section 271AAB, AAC, AAD shall be made to the appellate tribunal. Same thing, sir. Even further, Wide Finance Act 21, section 263 of the Act was amended to enable Principal Chief Commissioner and Chief Commissioner to pass order of revision under this section. However, in the absence of any reference to such orders passed under 263 of the Act, in subsection 1 of 253, an assessee agreed by any order passed in 263 of the Act by the PCAIT or CCAIT or an order in section 154 of the Act rectifying such order in 263 cannot appeal against such orders to the appellate tribunal. So therefore 253 is now amended so that appeal against an order passed under section 263 of the Act by Principal Chief Commissioner or Chief Commissioner or an order passed under section 154 in respect of any such order shall be made before the appellate tribunal. Assistance to authorized officer during search and seizure. Very interesting section. What is this? During the course of search, authorized officer, he may requisition the services of any police officer or any other officer of the central government to assist him or for any of the actions required to be performed during the course of search, and it shall be the duty of such officer to comply. Similarly, the authorized officer may make a reference to valuation officer for estimating the fair market value of the property. And the time limit is 60 days for that such reference can be made during the search or within 60 days from the date of executing the last authorization for search. Assistance to authorized officer during search and seizure. Now it's telling come to the present. Now in the present, due to the increased use of technology, digitization in every aspect, including management, maintenance of accounts, digitization of data, cloud storage, the procedure of search and seizure has become complex, requiring use of data forensics, advanced technologies for decoding data, etc., for complete and proper analysis of accounts. Similarly, there is an increasing trend of undisclosed income being held in a vast variety of forms of assets or investments, in addition to an immobile property. Valuation of such assets and decryption of information often requires specific domain experts. They want specific domain experts like digital forensic professionals, valuers, archive experts, etc. In addition to the services of other professionals like locksmiths, carpenters, etc., are also required in most of the cases due to the typical nature of the operations. Therefore, they are telling we want to make an amendment saying that relevant provisions of this section to provide that during the course of search, the authorized officer may requisition the services of any other person or entity, as approved by the PCCIT or CCIT or PDA, Principal Director General or DG, in accordance with the procedure prescribed by the board in this regard. Similarly, during the post and post-search inquiries, authorized officer may make a reference to any person or entity or any value registered by or under any law for the time being in force, who shall estimate the fair market value of the property in the manner prescribed and submit a report of the estimate to the authorized officer or the assisting officer within 60 days from the receipt of such reference. Any person or entity, they say, or any value registered by or on any law. Now, what are they telling now again? Prior to Finance Act 21, there was 153 ABC in the Act. Search was there and 153 ABC. After the Finance Act 21 was passed, 153 ABC is deleted from the statute. Where it has gone? Where are the provisions? It has gone to reassessment provisions. Procedure for conducting such assessment is now merged in the reassessment or assessment in consequence to search is now performed under 147 of the Act. Provisions of 153 AB are no longer applicable. Now, the timeline for completing assessment or reassessment in such cases linked to the execution of last of the authorizations during such procedure in order to establish the day of conclusion of such proceedings and what constitutes as last authorization is provided in 153B. But you know 153B is deleted from the statute by Finance Act 21. Therefore, they are telling it is we now provide the meaning of the execution of last authorization under 132 itself. No problem. It is the same meaning taken from 153B and put in now 132 because 153B no longer exists. Now, moving forward. Now there is alignment of certain timeline provisions under 153 of the Act. So what is happening? By Finance Act 16, you know, there was some tinkering with the time limits. You know, 143.3 time limit for assessment order, 144 time limit for, you know, best judgment assessment order, etc. So at that time, you know, that 143.1, 153.1 provided that what time limit for order of assessment at 143.3 or 144 was 21 months from the end of assessment year in which income was first assessable. Thereafter, subsequent Finance Act, time period of 21 months reduced to 9 months from the end of assessment year in which income was first assessable for assessment year 21-22 and later assessment years. Be careful. Now they are telling what happened. Again, Finance Act 22, what amendment came? Updated return 139.8A. What was the time limit? Same, sir, 9 months from the end of financial year in which return was furnished. Now they are telling, understand very carefully. They are telling what is the time limit for issuing notice on 143.2? 3 months from the end of relevant assessment year. This we didn't take up, sir, representation. The department took up this representation before the Ministry of Finance. They are telling, sir, what is the time limit for issue of notice on 143T today? Sir, 3 months from the end of assessment year. Very good. So up to June, 3 months from the end of assessment year, you are giving me time to issue notice. Very good. What is the time limit for passing order 143.3? 9 months from the end of assessment year. 3 months are gone, sir, for issuing notice. Only 6 months remains for me to make all the, you know, inquiries, etc., investigation, opportunity of hearing, all the material relevant on record. I have to analyze judicial positions of various legal battles, etc. But it is faceless assessment. You are giving me only 6 months time. There is assessment unit, there is verification unit, there is technical unit, review unit, etc. Faceless assessment, we have to coordinate all of them. You are giving 6 months time to pass the order 143.3, 144. I have to coordinate, sir, between all the different units. for every single scrutiny assessment. And adequate time is essential for rational and speaking order. Now they are telling period of 6 months is very short to complete the entire process of assessment. As a result, we are not able to resolve the taxpayer grievances. They are asking time. How can we give time, sir? My hands are tied. Assessing officer and taxpayer is asking time. I agree with the taxpayer. You are giving very less time to file the details. I have got only 6 months, 3 years from the end of assessment year, time limit to issue notice under 143(2). 9 months from the end of assessment year, which income is first assessable, is the time limit for passing order under 153(1). Order is passed on 143(3) or 144. Time limit is given 153(1). So therefore, they are telling, I cannot do quality assessment, give me more time. So this may also compromise the dispensation of reasonableness of orders as well as natural justice to the assessee. Therefore, it has been proposed that the time available for completion of assessment relating to the assessment year commencing on or 1st day of April 22 shall be 12 months from the end of the assessment year in which income was first assessable. 12 months now from the end of the month, from the end of assessment year, sorry, or from 1st day of April 22 shall be 12 months from the end of assessment year in which income was first assessable. Consistent with the above, the time available for completion of assessment proceedings in case of updated return is also proposed to be increased to 12 months from the end of financial year. There is 12 months from the end of assessment year in which income was first assessable. Now it is 12 months from the end of financial year for updated return 113.8A in which such return is furnished. So these are all, time limits. Move further. Modification of directions related to faceless assessment and proceedings, etc. Okay. Provisions related to reassessment proceedings. Very interesting. We can do for another 2-3 minutes and then we will, stop it, and then we can take up some questions. Because I am now, I have to travel also. Next 7 days, I am, taking all the sessions. I am now traveling to another city. Anyway, this is also very important, my dear friends. 148 of the Act, what they are telling, this is an amendment. I'll issue 148 of the Act. Reasonable time, you are filing the return, you are uploading the return in response to notice under 148. Obviously, 148 is issued after following the procedure of 148A, A, B, C, D. That 148A will next result into 148 notice. Now the law is telling 148 in response notice under 148, return shall be furnished within 3 months from the end of the month in which such notice is issued, or within such further time as may be allowed by the assessing officer on a request made by the assessee in this behalf. However, I'm not able to file. What to do? Sir, I can't file the return within 3 months from the end of the month in which such notice is issued. I am filing beyond 3 months. It is not a return filed under 139. Any return which is furnished beyond the period allowed in 148 to furnish such return of income shall not be deemed to be a return under 139. As I said, they are telling requirements, consequent requirements, notice under subsection 2 of 143, etc. would not be mandatory for such returns. Then again, they are telling that, last 2 minutes. In cases where a survey under 133 is conducted, assessing officer is deemed to have information. Whereas if search is conducted, what will happen, sir? There is information. Search is conducted, you have information. If you have information, what is there? There is no requirement. It is information which emanates from such proceedings. No question for me to go through the proceedings of 148 ABCD. Straight away I will reopen because I told you 153 ABC is deleted. Now a search case I have to issue notice under for last 6 years under 148 only. No question of following 148 ABCD. Further, for survey also they are telling it is deemed information, but the law 148 is telling it has to be mandated for survey. Although it is deemed information, you please mandate, you please follow 148 ABCD. It has to be seen that in cases where aforesaid search, requisition or survey proceedings are conducted after 15th of March of a financial year, there is extremely little time to collate this information and issue a notice under section 148 or show cause notice under 148 AB. Moreover, the search is conducted by the investigation wing and notice required to be issued by assessing officers. Therefore, it has been proposed to insert a proviso in the said section to provide that in cases where a search under 132 is initiated or a search for which the last of authorization executed or requisition made on 132A after 15th of March of any financial year, a period of 15 days shall be excluded for the purpose of computing the period of limitation for issuance of notice under section 148. That 15 days time is there. Shall be excluded for the purpose of computing the period of limitation for issuance of notice under section 148, and the notice so issued shall be deemed to have been issued on the 31st day of March of such financial year. One more proviso is inserted at 149, saying that where information is deemed to be with the AO, which emanates from statement recorded or documents impounded under summons or survey, that was for search. This is for survey. On or before 31st day of March of financial year, in consequence of search initiated or last of authorization executed in section 132 or requisition made 132, ditto provision, sir. Why? Survey after 15th day of March, search after 15th day of March. Then what they are telling? Don't worry, I am giving you a period of 15 days. I am going to exclude for the purpose of computing period of limitation for issuance of notice under 148 and the show cause notice under clause B of 148A in such case shall be deemed to have been issued on the 31st day of March of such financial year. It has also been provided that the impounding or recording of statement in consequence of search or the search itself should be before the 31st March only. Only extension has been provided for time consumed in the procedure for issuance of notice under 148 or 148A as the case may be. Okay, sir. Yes, sir. Viragji, are you there, sir?
Yes, sir. Yes, sir.
Yes, sir. Because there are a lot of provisions, so to the extent possible, we have tried to cover.
Yes, sir. Yes, sir. Yes, sir. Thank you. Thank you so much, sir.
Yes, sir.
In a day one, to cover so much in a less than 5 hours, it's really a commendable, sir. Thank you so much, sir. We also
Yes,
welcome Advocate Manoj Parekh, sir. So would like to request every panelist to come on screen. We already joined Aanchal Kapoor ma'am. She is waiting for the GST part as well. So would like to request Aanchal ma'am to come on screen. Also to CA Mausam Shah, our friend and coordinator for today's session. So thank you Naveen sir for the wonderful deliberation.
मतलब जो आपने बोला मैं उसी को सेकंड करूंगा कि उन्होंने बहुत ही कम समय में इतना डिटेल प्रेजेंटेशन तैयार किया और सबको बेनिफिट किया हुआ. थैंक यू.
बहुत ही शानदार.
Sir.
Thank you so much.
Thank you Naveen sir. Despite of you have to travel tonight to a different city, still you have given time to us and you have taken a session and prepared the session, entire session in a less than 5 hours. It's really commendable, and what a detailed analysis you have done for the direct access. Thank you so much, sir.
Thank you. Thank you.
We already received so many requests for the presentation what you have given, the PPT
Yes,
and the Word files.
I will mail it to you, sir.
Yeah, thank you so much.
Thank you.
So due to a lack of time, we will not able to take a question as of now, but we'll have another session for the question answer and a detailed in-depth analysis only for direct access and separate for indirect access as well. So once again, thank you Naveen sir for the wonderful deliberation.
Thank you Viragji. Thank you.
And now I would like to request CA Mausam Shah to introduce our today's second faculty, CA Aanchal Kapoor ma'am, who doesn't require any introduction, but as in part of a formal introduction, we will request CA Mausam Shah to introduce ma'am.
Yeah, thank you, Virag. As you rightly say, she does not need any introduction, but as a formality, I am doing it. And her introduction is like, it is very difficult to summarize in a few lines. So let me start with her introduction. CA Aanchal Kapoor is the fellow member of ICAI since 2009 and law graduate. She is a taxation practice for more than a decade. She pursued graduation in commerce from Guru Nanak Dev University, Amritsar, where she has been a gold medalist for her excellent academic performance. And she attained the 3rd rank all over India in PE1 and second rank in Northern India in CAPE1. To place a merit list of university in graduation. As an additional qualification, she has also completed the forensic audit and fraud detection course offered by the ICAI. Further, she has also been a merit holder of LLB completed in 2021. Apart from having splendid academic background, she has been in practice for over 12 years in indirect taxes and especially in GST. She is the national speaker on the GST and has delivered in around 500 plus lectures, that is seminars and webinars across India to the member of industry with a privilege of addressing gathering of 2,000 plus professionals. And she is approved faculty in National Academic of Custom, Indirect Tax and Narcotics, that is a GST officer training cell. She has also done several certified GST courses, including the GST courses offered by ICAI. She has been a faculty to the various certified courses of the GST. She is an approved faculty of ICAI. She has been privileged of contributions to the various journal of ICAI. She is a prominent writer and author in numerous articles of the GST published from the time to time in several magazines like AIFTP Journal, ACA Journal, Vipka Kolkata. She is a regular writer in various online discussion portal also, that is a Taxman, Tax Management India, Tax Guru, etc. She is a co-author of various ICAI publication. मतलब शब्द बहुत कम मिलेंगे. She has a lots of achievements and lots of more awards and everything. So just to summarize, I must say that we are very lucky to have you, ma'am. And for the indirect tax analyst, your analyze on the budget, and that is also especially on the budget day itself. Thank you so much for your time and welcome to you. Over to you.
Thank you so much, Masin ma'am, for the introduction. Thank you so much, Virajji, founder Connect Easy, for giving me this opportunity to interact on this platform, which is indeed one of my favorites. And friends, I have tried my level best to summarize the provisions with the PPT on the very first day. In case of any error or a typing error, please excuse us for the same. Virajji, can I share the screen, please? Please let me know if the screen is visible.
Yes, ma'am. Screen is visible.
Yes. You can see my screen, but I cannot see that it's connected. 1 second.
It's connected, ma'am. You can. It's behind your photo, maybe. You just need to put on a slideshow mode.
Yeah, I have put it on a slideshow mode. Yeah, can you see budget 2023?
Yes, ma'am. Yes, ma'am.
All right, and I can interact with the participants through the chat box. Can I?
1 second.
Indirect taxes.
Ma'am, your voice is not audible.
Ma'am, now your voice is audible. You can interact with question tab. Question tab will work as a chat box as well. So you can see on the control panel the question tab. You can open from the square box. Yeah.
Right. So I was saying, I know I'm sitting between you and your dinner. Right, even I'm very hungry. So quickly we will be doing the indirect tax provisions. Because indirect tax provisions का तो budget आता ही रहता है. I must say that during the year, any number of times you see indirect taxes ka amendments comes into being, right? So friends, without taking much of the time in other things, let me start with budget 2023. If I talk about in the first 3 slides, I have just given which sections amended and what is the amendment, the crux, the summary, because nowadays we are in a habit of doing WhatsApp, reading the law through WhatsApp. So this was also a WhatsApp message where I have summarized that what change in section has taken place. Let me tell you one thing, friends. So may I request you to kindly mute the other participants? All right. So friends, what I want to say here is that in GST in budget, what we see, जो proposals 48th मीटिंग में rather जो particularly दिसंबर में आए थे और जिनके लिए एक्ट्स में changes were required, so वो सारे changes जो हमने 48 में देखे and some other जो previous meetings में decide हुए थे, वो सब उन्होंने इस बजट के थ्रू जो है CGST और IGST एक्ट में किए हैं, right? So I will not be reading verbatim the law. I have summarized all the provisions. सबसे पहले बात आती है ये provisions applicable कब से होंगे. So let me tell you, all the clauses are for CGST Act are from 128 to 142 and for IGST Act are 143 to 144. And friends, you can see sections 2 to 122 shall come into force from 1st April 2023. So all these changes in GST will be applicable from 1st April 2023 except the two changes in section 23 and schedule 3. These will also come from 1/4/2023 itself, but with retrospective effect from 1/7/2017. Right? So can I see a few messages in the chat box? Are you there all with me? Now, let me tell you what has been the changes. Starting with the first changes in section 10 for the composition persons. Composition persons, before this amendment, supplier of goods or services, you people were not allowed. Great, Sanjeev ji, I can see your message. So they were not allowed to go for the e-commerce. Composition persons were not allowed for e-commerce. Actually, what is the base of this amendment? I know you all have read the budgetary proposals, but what has been the reason behind and what will be the impact? ये दो चीजें I will be adding on to it. 47 मीटिंग हुई, उन्होंने बोला कि हम सेक्शन 24 क्लॉज 9 में चेंज करेंगे, इंट्रास्टेट सप्लायर्स को, कुछ अनरजिस्टर्ड को वी विल अलाउ देम कि दे कैन गो थ्रू द ई कॉमर्स ऑपरेटर, और 1/1/2023 से ये स्कीम वो लाना चाहते थे. However, in the 40th council meeting, they again mentioned unregistered supply composition में हम intrastate supply of goods को allow करेंगे, but date extend the 1/10/2023. Now only the composition वालों को अभी उन्होंने e-commerce के थ्रू, और वो भी अगर आप supplier of goods हो, intrastate supply allow की है. So 47th or 48th meeting में what they proposed, out of that they have allowed what? In old, चाहे goods और services के supplier थे, आपको कॉम्पोजिशन अलाउड नहीं था अगर आप ई कॉमर्स के थ्रू गुड सप्लाई करते थे. यानी मेरे पास एक पर्सन आता है, वो बोलता है मैं नया काम शुरू कर रहा हूं और मैं अपना प्रोडक्ट ई कॉमर्स के पोर्टल पे रजिस्टर कराना चाहता हूं एंड कॉम्पोजिशन लेना चाहता हूं. Answer was no. If you want to go through e-commerce operator, composition scheme is not allowed. But what is in the new thing? Only and only for the goods. For services, the composition is still not allowed if you want to supply goods through e-commerce operator. But if you're a supplier of goods and doing intrastate supplies, then the composition scheme is allowed. Right? So this has been the change. Section 10(2)(d) and 10(2)(a. Friends, 10(2) वो स्कीम थी जो ओरिजिनली आई थी जिसमें 1.5 लाख की लिमिट है, एंड सेक्शन 10(2)(a) वो स्कीम है जिसमें सर्विसेज वाले को 6% पे जीएसटी देना है. ये थी वही 1% वाली और 5% वाली जिसमें रेस्टोरेंट्स एक्सेट्रा थे, गुड्स के सप्लायर. उन दोनों में ही सप्लाई ऑफ गुड्स का कंडीशन फॉर ई कॉमर्स ऑपरेटर थ्रू सेक्शन 52, अगर आप ई कॉमर्स ऑपरेटर के थ्रू जाना चाहते हैं तो गुड्स के लिए अब अलाउड कर दिया गया है दैट यू इवन इफ यू आर अ सप्लायर ऑफ गुड्स of then even you can come into the composition scheme. Now moving ahead, friends, so this has been the situation. देखिए, एक slide में I have tried to summarize the provision. What is it? If you are a person supplying the goods through e-commerce portal, first I have to check whether services or secondly goods. Services है कि goods है. अगर तो services है तो कॉम्पोजिशन टैक्स पेयर को अलाउड ही नहीं है कि वो ई कॉमर्स में आए. सर्विस वाले हो तो कॉम्पोजिशन में नहीं हो सकते। हाँ, गुड्स पर्सन हो तो कॉम्पोजिशन में हो सकते हो या नॉर्मल टैक्स पेयर भी हो सकते हो, बट इसमें अभी भी रजिस्ट्रेशन मैंडेटरी है। सेक्शन 24 क्लॉज 9 में अभी तक कोई चेंज नहीं किया गया है। हाउएवर सर्विसेज का जो सप्लायर है उसमें पहले मैं देखूंगी, कॉम्पोजिशन वाला तो आ ही नहीं सकता। हाँ, अब आप नॉर्मल टैक्स पेयर हो, आप कौन सी सर्विस देते हो? 95 वाली यानी डीम्ड सप्लायर वाली, रेस्टोरेंट एंड जो 4 नोटिफाइड सर्विस है, ओके डन, उसमें तो ई कॉमर्स ही डीम्ड सप्लायर होता है, राइट? अगर आप उसके अलावा अदर सर्विसेज देते हो तो आपको पहले भी थ्रेशोल्ड अलाउड थी, वाइड नोटिफिकेशन 65, और थ्रेशोल्ड से ऊपर जाते थे तो टीसीएस लगता था। मीनिंग देयर बाय माय डियर फ्रेंड्स, द चेंज इज ओनली इन द कॉम्पोजिशन पार्ट. रेस्ट प्रोविजन आई हैव डन मेंशन्ड हियर टू मेक यू अंडरस्टैंड कि अगर आपके पास कोई ई कॉमर्स के लिए आता है, ऑलवेज पास चेक कि वो ई कॉमर्स पोर्टल के थ्रू गुड सप्लाई करना चाहते हैं, सर्विसेज. Accordingly, the provisions will apply. For goods, a person can be normal or composition registered, but must be a registered person, and TCS will be applicable. For services, depends the nature of service. Composition not allowed. After that also, डीम्ड सप्लायर नोटिफाइड 95 का सर्विसेज है कि अदर सर्विसेज है, इस केस में आपको अनरजिस्टर्ड होने पर बेनिफिट मिलता है, 20 लाख का थ्रेशोल्ड मिलता है, टीसीएस नहीं लगता है. 20 लाख से ऊपर जाओगे तो टीसीएस लगेगा. सो इन ई कॉमर्स वी हैव मस्ट टू बाइफिकेट बिटवीन द गुड्स एंड द सर्विसेज. सो पहला अमेंडमेंट जो हमने डिस्कस किया, दैट वाज इन सेक्शन 10, wherein composition of supplier in composition of goods was allowed to opt for the e-commerce together with it. All right, now moving ahead. Second, section 16 में change किया, उसकी प्रोवाइजो में, प्रोवाइजो किससे रिलेट करती थी? 180 डेज की प्रोवाइजो. 180 सर बेस क्या था? बेस ये था कि रूल 37 वो ऑलरेडी अमेंड कर चुके थे, वाइड नोटिफिकेशन 19/2022 एंड वाइड नोटिफिकेशन 26/2022. इनको वो पहले ही अमेंड कर चुके थे 19/22 और 26/22 के थ्रू. नाउ हियर अब उन्होंने सेक्शन 16 सबसेक्शन 2 की प्रोवाइजो को अमेंड किया. सिंपल सर, जब जीएसटी लॉ आया था तो ऑटोमेटिक प्रोसीजर था, कहते थे कि 180 दिन में अगर आप पे नहीं करोगे तो आपकी आउटपुट लायबिलिटी में ऐड हो जाएगा. अब ना तो ऑटोमेटिक प्रोसीजर रहा, ना ऑटोमेटिक एडिशन होगा. सो एज अ रिजल्ट दे मेंशन हियर, इंस्टेड ऑफ एडेड टू हिज आउटपुट लायबिलिटी, इट हैज टू बी पेड बाय हिम अलोंग विद इंटरेस्ट एज पर सेक्शन 50. आपको अब पता होगा पिछले बजट 2022 के जो चेंजेस 18 अक्टूबर जो अक्टूबर 2022 में नोटिफाई हो गए थे, from 1st October, in that case it was held that आपको जो भी आपकी जो 3B है वही एक वैलिड रिटर्न है, प्रोविजनल क्रेडिट खत्म कर दिया गया, द GSTR 2 डन अवे कर दी गई है. सो इन लाइट ऑफ ऑल दैट थिंग्स 180 डेज का रूल 37 भी उन्होंने रेगुलेट किया, और उसके साथ साथ अब उसकी प्रोवाइजो में भी डाल दिया कि आपको इसको पे करना पड़ेगा इन द मैनर एज में बी प्रिस्क्राइब, और प्रिस्क्राइब कर दिया रूल 37 में. क्या प्रिस्क्राइब कर दिया? पहले से ही कर चुके थे. क्या कि होली करो पार्टली करो, यानी अगर आप प्रोपोर्शनेट पेमेंट करोगे अपने सप्लायर को तो प्रोपोर्शनेट क्रेडिट आपको अलाउड हो जाएगा, बाकी आपको पे करना पड़ेगा. पे करिए या रिवर्स करिए ITC. So ultimately the adjustment has now to be done manually because the automatic mechanism is not in picture. So 180 दिन में अब आपको खुद ये रिवर्सल्स करने हैं. My dear friends, पिछले टाइम पीरियड में हमने 180 डेज में सप्लायर को जब पेमेंट नहीं की थी, हमने उसके रिवर्सल्स नहीं की है at many points for which the notices are even being issued. और जब ऑफिसर ऑडिट कर रहा है, डिपार्टमेंटल ऑडिट्स हो रहे हैं, तो even then they are raising the objection. हम उसमें कई प्लीज लेते थे कि रूल 37 का मशीनरी प्रोविजन एग्जिस्टेंट नहीं है. इन ऑर्डर टू स्मूथ लाइन द सेम, गवर्नमेंट ने रूल 37 का प्रोसीजर भी अमेंड किया और अब सेक्शन 16 सबसेक्शन 2 की प्रोवाइजो को भी अमेंड कर दिया है, एंड वर्ड्स पेड बाय हिम along with the interest under section 50 has been mentioned. Right, considering the time constraint, I'm not going into interaction with you all so that I will be able to cover the provisions. Second change, a normal change, पहले नीचे प्रोवाइजो में वर्ड्स थे, रिसीवर तुम दोबारा इनपुट टैक्स ले लोगे when the payment be when the payment made by him के आगे to the supplier words have been added through this budget, through this finance bill 2023 कि आपको पेमेंट किसको करनी है, सप्लायर को करनी है. जब पेमेंट सप्लायर को आप करेंगे then you will be eligible to entitled to avail the credit of input tax. So this point has been कि पेमेंट अल्टीमेटली सप्लायर के पास जब जाएगी then the recipient shall be entitled to avail the credit. So second amendment हमने 180 days की देखी, जिसमें in light of rule 37 the amendment has been brought in proviso to section 16. चलिए, now third and the important amendment, what's that? Sir, section 17 subsection 3 में हम रिवर्सल्स करते हैं अगर आपके पास जो इक्विवेलेंट जो रूल 42 और 43 को रेफर करता था, उसकी एक्सप्लेनेशन में लिखा था, सेक्शन 17(3) की एक्सप्लेनेशन कहती थी एग्जेम्प्ट सप्लाई में शेड्यूल 3 की सप्लाईज नहीं आती हैं, यानी आपको उसके लिए रिवर्सल करने की जरूरत नहीं है, एक्सेप्ट सेल ऑफ लैंड एंड बिल्डिंग वही जो वहां पे अंडर कंस्ट्रक्शन बिल्डिंग जो आफ्टर कंस्ट्रक्शन बिल्डिंग है. सो पैरा 5 को छोड़कर ऑफ शेड्यूल 3 बाकी सब एग्जेम्प्ट सप्लाई का पार्ट था. इसका मतलब एग्जेम्प्ट सप्लाई में नॉर्मल शेड्यूल 3 सप्लाईज नहीं आएंगी बट पैरा 5 आएगा. नाउ देयर इज एन एडिशन. नाउ यू कैन सी देयर आर 2 ग्रीन टिक्स. व्हाई सो? Schedule 3 supplies अभी भी नहीं आएंगी in exempt supply for the reversal purposes, but para 5 आएगा, along with it para 8 आएगा, warehouse goods, these inbound sales. Now what happened? This is Mr. A of India. Now this will be the part of exempt supply. Exempt supply वैसे ही schedule 3 supply है. This is point number 8 of schedule, entry number 8 of schedule 3, but for the purpose of section 17 subsection 3 का explanation, it will be the part of exempt supply for the purposes of reversal. Transaction क्या है? Mr. B ने USA से goods मंगवाए, purchase किए Mr. A ने, अभी गुड्स बॉन्डेड वेयरहाउस में ही पड़े थे, बिल ऑफ एंट्री फॉर होम कंजम्पशन फाइल नहीं हुई थी, उससे पहले ही उन्होंने ये मिस्टर सी को सेल कर दिए. तो इट वाज हेल्ड दैट बिकॉज इट वाज सोल्ड टू मिस्टर सी बिफोर फाइलिंग द बिल ऑफ एंट्री, दिस ट्रांजैक्शन इज नॉट अ सप्लाई. This transaction is not a supply because goods ने अभी तक custom barriers cross ही नहीं किए, goods bonded warehouse में पड़े थे. अब Mr. A, तुम्हारी ये transaction schedule 3 में supply नहीं है, but जब तुम्हारे reversal calculate होंगे 42-43 में, तो इस transaction का जो revenue होगा that will form part of the exempt supply. So ultimately पैरा 8A शेड्यूल 3 की 2 एंट्रीज अब एग्जेम्प्ट सप्लाई में आएंगी. फर्स्ट पैरा 5 एंड एज वेल एज पैरा 8, सप्लाई ऑफ वेयरहाउस गुड्स टू एनी पर्सन बिफोर क्लियरेंस फॉर होम कंजम्पशन. सो दिस विल फॉर्म पार्ट ऑफ एग्जेम्प्ट सप्लाई और इसके इक्विवेलेंट रिवर्सल्स ऑफ कॉमन क्रेडिट्स आपको करने पड़ेंगे, और एनी स्पेसिफिक क्रेडिट टू दिस यू हैव टू कंसिडर दैट. Now, moving ahead, amendment in section 17, subsection 5. CSR, corporate social responsibility, which is one of the main conditions, one of the important conditions for the survival of the companies that are supposed to do. Sorry, just a minute. Yeah. So one of the mandatory conditions, lekin it has always been a disputable issue. There has been many judgments in pre-GST regime also, some allowing the CSR credit, some not allowing the CSR credits. So government has put an end that the goods or services or both received by a non-resident taxable person, except for the goods imported by him. Now they have mentioned that the goods or services received by a taxable person to be used for CSR activities as required under 135 of Companies Act, it is disallowed as per section 17(5) FA. So, but again, a question mark I have put in. What about the pre-amendment period litigation? The pre-amendment period litigation has nothing been specified. So जिनके cases लगे हैं, जो matter चल रहे हैं, friends, this is not a retrospective amendment. This will be prospective with effect from 1/4/2023. So if it will be effective from 1/4/2023, इसका मतलब उससे पहले law में कोई provision exist ही नहीं करता था. So it puts a question mark on pre-amendment period litigations that are going on. Now, moving ahead, section 23. I have again put a question mark here. You can all see on your screen. But before coming to that, let me tell you what has been the amendment. पहले सेक्शन क्या था? सेक्शन 23 सारा वैसे का वैसे है. क्या भाई, अगर आप एक्सक्लूसिव सप्लायर ऑफ एग्जेम्प्ट गुड्स हो, ए सप्लाई ऑफ एग्जेम्प्ट गुड्स और सर्विसेज हो, या आप ऐसे गुड्स सेल करते हो which are not liable to tax like petroleum products, like liquor for human consumption, या फिर आप एक एग्रीकल्चरिस्ट हैं एंड आपकी कोई भी टैक्सेबल इनकम्स नहीं है, आपके पास ये जो आप सप्लाई कर रहे हो, यू आर एक्सक्लूसिवली एंगेज्ड इन ऑल दीज थिंग्स. थ्री थिंग्स: exempt supplies, exclusively exempt supplies, exclusively supplies that are not liable to tax, or if you are an agriculturist, तो आपको रजिस्ट्रेशन करवाने की जरूरत नहीं है. अरे सेक्शन पहले भी यही था, सेक्शन अभी भी यही है, लेकिन आगे वर्ड्स ऐड कर दिए, नॉट विथस्टैंडिंग एनीथिंग कॉन्ट्रेरी कंटेन्ड इन सेक्शन 22 सबसेक्शन 1 और सेक्शन 23 or section 24, it should be, or section 20. It has been given an overriding effect to section 22 subsection 1 and section 24. इसका मतलब आपको रजिस्ट्रेशन कराने की जरूरत नहीं है अगर आप इन एक्सक्लूसिव एग्जेम्प्ट गुड्स में डील करते हो, या सर्विसेज में डील करते हो, या नॉट लायबल टू टैक्स गुड्स और सर्विसेज में डील करते हो, या एग्रीकल्चरिस्ट हो. एंड नाउ this section has overriding effect as to section 24. Now my question to you all is, what about section 24 ka RCM? Now I give you an example. A person is dealing in liquor. Liquor is not liable to tax. He is not doing anything, but he is paying GTA. GTA which is liable for reverse charge as per section 24. अब लॉ ने तो कह दिया, अगर आप exclusively engaged हो supply of not liable to tax goods, you are not liable to be registered. अब वो लीकर वाली पार्टी पहले से डिस्प्यूट में थी. सर, सर्विस टैक्स में क्या होता था? सेपरेट एंट्री होती थी, सिर्फ आरसीएम के लिए रजिस्टर हो जाइए. पर जीएसटी में ऐसा नहीं था. यू हैव टू गेट रजिस्टर्ड. रजिस्टर्ड मीन्स रजिस्टर्ड फॉर ऑल पर्पसेस. So as चाहे टैक्स ना लगे लीकर पे, बट रजिस्ट्रेट मींस रजिस्टर्ड फॉर ऑल पर्पसेस. तो ये लोग ऑलरेडी एक उसमें निकल रहे थे कि हम जो जीटीए की सर्विस ले रहे हैं उसके लिए क्या हमें रजिस्ट्रेशन करानी है मैंडेटरी एज पर सेक्शन 24. Now this amendment is giving overriding effect to section 24. As a result, now a question arises. It means the RCM provisions, mandatory RCM registration RCM provisions of section 24 will not be applicable or should not be applicable in case of supplier of exempt supplies or not liable to tax supplies or agriculturists. So as of now, the bare reading of the section says as 23 is overriding effect, so RCM provisions will not be applicable. Let's see how the things turn in the times to come. Moving ahead. 4 sections, 4 clauses I'm taking together. Section 37, 39, 44, 52. What are those? GSTR 1, GSTR 3B, annual return, and GSTR 8. चारों को रिकमेंडेड भी था मीटिंग ऑफ जीएसटी काउंसिल में, 48 जीएसटी काउंसिल में, सब में सेक्शन ऐड हुए। ऐड होने के बाद प्रोविजन इंट्रोड्यूस कर दिया गया है कि भाई मैक्सिमम टाइम 3 इयर्स है फ्रॉम द ड्यू डेट ऑफ filing of the return. So last date to file GSTR 1, 3B annual return, GSTR 8, it is annual return. GSTR 8, it is 3 years from the due date of furnishing of GST return, and the power has been given to the government कि वो चाहें तो allow कर सकते हैं even after the expiry of the period if they want certain persons, so they can allow. So a power has been given to the government for the same, but now the maximum time period was 3 years, जहां पहले कोई भी cap नहीं था, right? So I hope you all are not feeling Sanjeev ji has asked, not liable as main goes exempt. Of course, Sanjeev ji, this overriding effects is, see, main goes as exempt is a separate thing. What you are supplying is not liable to tax. There is no denial. But about the input services you are taking, it was covered under mandatory reverse charge. But if you are not registered, how will you pay that for mandatory reverse charge? And furthermore, it has overriding effect to section 24. It means you are not liable to register even if you are under RCM. So when you will not be registered, you are not liable to be registered, how will you pay the tax? Right? All right. So moving ahead, refunds. 90% provisional refund allowed hai. Export के केस में within 7 days. A technical change, words delete हुए, excluding the amount of input tax credit provisionally accepted. अरे provisional credit का concept ही section 41 में by budget 2022 खत्म कर दिया गया था. Whatever will be the amount credited to 3B is now going to be your credit. Now there is no provisional credit. So इसीलिए section 54 में उन्होंने ये words delete कर दिए क्योंकि इनका कोई relevance ही नहीं रहा. अब कोई provisional ITC है ही नहीं. So ultimately सीधी बात, आप export का refund लगाएंगे, officer 90% of the provisional refund you have to give within a period of 7 days, and there is no concept of provisionally accepted ITC anymore due to amendment in section 41 wide budget 2022. Right? चलिए, interest on delayed refunds आ रहे हैं? नो सर, तेरावाकर जी 3 साल का ITC का टाइम पीरियड नहीं है. दिस इज ओनली रिटर्न फाइलिंग कैप दैट हैज बीन गिवन फॉर 3 years. फॉर ITC प्लीज रेफर टू सेक्शन 16. हाँ, संजीव जी बोलते नहीं आ रहे इंटरेस्ट ऑन डिलेड रिफंड्स. आई नो संजीव जी, फॉर दीज वी विल बी श्योरली हैविंग सम रूल्स कि after the expiry of 60 days from the date of receipt of such application, if the refund is not granted, then for the period of delay you will be given the interest. The government has been given the rule making power that they will be bringing up the rules for the interest on delayed refunds. So a rule making power has been granted to the government for the same. All right, moving ahead, decriminalization. Sir, सबसे ज्यादा havoc पता है क्या होता था? Many a times I have received certain calls or people asking कि कुछ कागज नहीं मिले हैं, ITC का इवेजन नहीं है, बट कुछ कागज इधर उधर हो गए, तो ऑफिसर कहता है कि मैं आपको टेम्परिंग ऑफ मटेरियल एविडेंस के केस में आई कैन पुट यू बिहाइंड द बार्स. obstruction of prevention of officer in discharge of his duties, अगर आपने हमें कुछ भी करने से रोका, failure to supply the information and all that, we can put you behind the bars because ये तीनों offenses criminalized offenses थे for which punishment was existing. Now these 3 offenses, what are those 3? Have a look on these here. Tampers or destroys material evidence, fails to supply the information, and here at the bottom it is, you cannot see the clause J. And if you are in the position, if you are doing, I show you from here, you can see. Okay. So obstruction of preventing an officer in discharging his duties, ये तीनों offense decriminalize कर दिए गए हैं. Now punishment for these does not exist. One thing. Second, so first was this change with respect to the punishments. 3 offenses have been decriminalized. Second, 1 crore से पहले prosecution start हो जाता था. अब 1 करोड़ का लिमिट सिर्फ क्लॉज बी, 1 से 2 करोड़ का लिमिट सिर्फ क्लॉज बी के लिए रह गया है. क्लॉज बी का मतलब जब आप विदाउट सप्लाई ऑफ गुड्स और सर्विसेज, अगर आप इनवॉइस इशू कर रहे हैं और अंडरलाइन गुड्स और सर्विसेज नहीं है, उसी में लिमिट 1 करोड़ होगी. फॉर अदर ऑफेंसेस इट इज गोइंग टू बी 2 करोड़. 5 करोड़ से एक्सीड करेगा 5 साल का पनिशमेंट, 2 करोड़ से 5 करोड़ 3 इयर्स का पनिशमेंट, और 1 करोड़ से अबव ओनली फॉर क्लॉज बी द इम्प्रिजनमेंट विल बी अप टू 1 ईयर. So यहाँ पे वर्ड only for clause B have been inserted. Friends, rest of the provisions are same. A, B, C, D का कोई डिफॉल्ट अगर आप करते हैं और वो डिफॉल्ट अगर आपका स्पेसिफाइड लिमिट से जो अबव होता है, 5 करोड़ से अबव होता है, तो ऑफेंस कॉग्निजेबल मींस और नॉन बेलेबल हो जाता है. द वारंट रिक्वायरमेंट डज नॉट एग्जिस्ट एंड इट बिकम्स अ नॉन बेलेबल ऑफेंस. ऑल दोस प्रोविजंस रिमेन सेम. सो पहला क्या चेंज हुआ? 3 तरह के ऑफेंसेस डिक्रिमिनलाइज कर दिए गए. सेकेंडली, जो पनिशमेंट का जो स्कोप है वो लेसर किया गया. 1 करोड़ के लिमिट को 2 करोड़ कर दिया गया, एक्सेप्ट फॉर क्लॉज बी. फॉर दैट इट इज 1 करोड़ इटसेल्फ, फेक ट्रांजैक्शंस के केस में. थर्ड चेंज, कंपाउंडिंग. कंपाउंडिंग फी पहले जो लग रही थी, नाउ दैट हैज बीन रिड्यूस्ड. हियर इट इज. व्हाट इज दैट रिडक्शन? ओल्ड केस में मिनिमम कंपाउंडिंग थी 10,000 और 50% ऑफ टैक्स, whichever is higher, और मैक्सिमम थी 30,000 और 150% ऑफ टैक्स. Now this 50% has been replaced by 25%. 150% has been replaced by 100%. So the compounding, and these all were the proposals that were given by 48th council meeting, that 2 crore limit will be done, 25 to 100 and 50 to 150. These changes will be done, and 3 offenses G, J and K will be decriminalized. So this is all about decriminalization under GST. Right, coming to the next amendment for e-commerce operator. अभी हम prosecution और penalties की ही बात कर रहे हैं. So e-commerce operator, तुम्हारे ऊपर एक नया सेक्शन इंसर्ट किया गया है, which is 122(1)(a, जिसमें तुम्हें पेनल्टी लगाई गई है फॉर सर्टेन ऑफेंसेस. क्या? अनरजिस्टर्ड पर्सन को तुम्हारे साथ डील करने की परमिशन नहीं है, एक्सेप्ट नोटिफिकेशन 65/17 में, जहां पर सर्विसेज के सप्लायर को, याद है मेरी स्लाइड, सर्विसेज का सप्लायर थ्रेशोल्ड एंजॉय कर सकता है, अनरजिस्टर्ड रह सकता है, टीसीएस नहीं लगेगा. अगर पर्टिकुलर पर्सन बाय नोटिफिकेशन एग्जेम्प्ट है तो ओके, बट अगर तुमने उसके अलावा किसी अनरजिस्टर्ड पर्सन को अपने थ्रू डील करने दिया तो पेनल्टी तुमसे लेंगे ई कॉमर्स ऑपरेटर. अगर तुमने इंटर स्टेट सप्लाई ऑफ गुड्स इनएलिजिबल पर्सन को अलाउ की तब तुम्हें हम पकड़ेंगे. अगर तुमने अपने जीएसटीआर 8 में ऐसे अनरजिस्टर्ड पर्संस की डिटेल्स को इनकरेक्टली फर्निश किया या प्रॉपरली नहीं दिखाया, in that case you will be liable to a penalty which is equivalent to the amount of 10,000 or the tax involved, whichever is higher. So e-commerce operator, now you will be liable for the above penalties if you do any of these 3 defaults. Next change, section 158A. Consent based income tax, various other laws, they all have been talking about sharing of information. एक डिपार्टमेंट से दूसरे डिपार्टमेंट पर, आर्टिफिशियल इंटेलिजेंस में, डेटा शेयरिंग में. So now they have empowered the government for sharing of information for the governance purposes. Consent based sharing, कि कॉमन पोर्टल या गवर्नमेंट चाहे आपने जो GSTR 1 भरी है, एनुअल रिटर्न भरी है, रजिस्ट्रेशन कराते हुए जो डाटा दिया है, दे कैन शेयर दैट इंफॉर्मेशन, बट इसके लिए वो कंसेंट लेंगे सप्लायर का फॉर सर्टेन इंफॉर्मेशन एंड फॉर रिसिपिएंट का फॉर अदर क्लॉज बी की इंफॉर्मेशन के लिए, एंड देन द डेटा विल बी शेयर्ड विद द अदर पीपल. The data will be shared with such other systems as may be notified by the government, like MCA, like certain other information or power systems. They can be sharing the data now. And if उसमें अगर आपके अगेंस्ट कुछ भी एक्शन लिया जाता है तो उसके लिए कॉमन पोर्टल और GSTN रिस्पॉन्सिबल नहीं है. So a sharing of information being empowered. Friends, another change. अब सबको पता है हाई सी सेल्स ट्रांजैक्शन GST के प्रीव्यू में नहीं है. दिस इज अ Schedule 3 सप्लाई, राइट? इसको इंट्रोड्यूस किया गया. ये पहले भी प्री GST रिजीम में भी टैक्सेबल नहीं थी और अब भी टैक्सेबल नहीं है. But because it was later on inserted, it was giving rise to dispute. So they said this amendment will take effect from 1/7/2017. It will be considered as a part of Schedule 3, that there is no tax before the goods cross the custom frontier. अगर उनको sell कर दिया जाता है, so Mr. Y in this example will step into the shoes of. Is there any voice issue, Mr. Himmat? I think so. Kindly check it at your level. Now, so in that case, Schedule 3 supplies, ये पहले भी वैसे रहेगी. Yes. What is custom frontier? Sir, जहां से इंडिया की बाउंड्री स्टार्ट मानी जाती है, जहां से गुड्स आर कंसिडर्ड एज एंटरिंग इंडिया, लाइक योर कस्टम पोर्ट्स पे कस्टम फ्रंटियर्स होते हैं. अगर आप उसको क्रॉस कर जाते हो, इट इज डीम्ड दैट द गुड्स हैव एंटर्ड इंडिया. सो दोस आर नोन एज कस्टम फ्रंटियर्स ऑफ इंडिया, जहां पे जब तक उनका बिल ऑफ एंट्री फाइल नहीं होता है, जब हम एक्सपोर्ट करते हैं, तो जब गुड्स क्रॉस करते हैं कस्टम फ्रंटियर्स, दैट इज कंसिडर्ड एज एक्सपोर्ट. व्हेन वी इंपोर्ट, सो देन व्हेन दे एंटर इनटू द कस्टम बाउंड्रीज ऑफ इंडिया, दैट विल बी कंसिडर्ड एज कस्टम फ्रंटियर्स, राइट? सो अगर गुड्स अभी इंडियन में बाउंड्रीज में नहीं आए थे, कस्टम फ्रंटियर क्रॉस नहीं कर रहे थे, अभी वो हाई सील्स में थे, तभी मिस्टर एक्स ने उनको मिस्टर वाई को बेच दिया. So this transaction of Mr. X will not be liable to tax. It is not a supply. It is a Schedule 3 supply provision already existing, just given with effect from 1/7/2017. High seed sales transaction आज भी 17(3) के अकॉर्डिंग पार्ट नहीं है एग्जेम्प्ट सप्लाई का, ना मर्चेंट ट्रेडिंग ट्रांजैक्शन और ना ही हाई सील्स ट्रांजैक्शन. अभी जो अमेंडमेंट हुई है, दैट इज ओनली विद रिस्पेक्ट टू इन बॉन्ड सेल्स. वेयर हाउस में संजीव जी, कुछ वेयर हाउसेस कस्टम पोर्ट्स पे बने होते हैं, अभी तक बिल ऑफ एंट्री फॉर होम कंजम्पशन फाइल नहीं होती है और वो बॉन्डेड वेयर हाउसेस में पड़े होते हैं. उनको सेक्शन 17 सबसेक्शन 3 में एक्सप्लेनेशन के थ्रू एग्जेम्प्ट सप्लाई का पार्ट बनाया गया है इस बजट में. हाई सी सेल्स और मर्चेंट ट्रेडिंग ट्रांजैक्शंस को नहीं बनाया. अब व्हाट इज द डिफरेंस बिटवीन हाई सी सेल? सर, यहां जो माल बिका मिस्टर वाई को, वो इंडिया का ही था, लेकिन मर्चेंट ट्रेडिंग ट्रांजैक्शन में यूएसए से परचेज हुए गुड्स ऑस्ट्रेलिया चले गए. इवन दिस इज नॉट अ ट्रांजैक्शन, दिस इज अगेन अ Schedule 3, नॉट अ सप्लाई. पर ये दोनों ट्रांजैक्शन एग्जेम्प्ट सप्लाई का पार्ट नहीं है. हाँ, लेकिन जो इन बॉन्ड मैंने कराई थी, जो वेयर हाउसेस में पड़ी होती है, उसे सप्लाई का पार्ट माना गया है. So with this, the amendments except IGST Act की 2 amendments है, which I just specify here. Just give me a. Is the screen yet? You can see the screen yet? Right. All right, Sanjeev ji. Now look, friends, एक OIDAR services है जिसका इन्होंने डेफिनेशन चेंज किया है, और क्योंकि देयर वर लॉट्स ऑफ इश्यूज इन्वॉल्व इन दैट, और नो NTOR का डेफिनेशन जो है These two definitions have been changed in IGST Act. If it is not the part of it, anyhow, I just let you know. Let me show this to you. So ये थी वो inbound transaction which I was talking about. ये inbound को exempt का part माना गया है. All right. सर दो चीजों में चेंज हुआ है IGST में. NTOR का definition which is as per the clause let me open, which is as per clause 143, non-taxable online recipient का definition has been changed and OIDAR का definition has been changed. उसमें जो words थे essentially automated and involving minimal human action, that has been deleted now. This amendment has been done in order to overcome the litigations, the disputes that have been going on, and 12 subsection 8 proviso has been deleted. अभी गवर्नमेंट ने सर्कुलर 184 इशू किया था. क्या किया था? अगर आपके गुड्स ट्रांसपोर्ट हो रहे थे आउटसाइड इंडिया, सो दे सेड जो गुड्स आपके आउटसाइड इंडिया ट्रांसपोर्ट हो रहे हैं उसके लिए प्लेस ऑफ सप्लाई इज गोइंग टू बी द डेस्टिनेशन ऑफ द गुड्स. यानी प्लेस ऑफ सप्लाई कहां बन गई? आउटसाइड इंडिया. सो अ कंसर्न वाज रेज्ड कि जिसका प्लेस ऑफ सप्लाई आउटसाइड इंडिया उसका आईटीसी से मिलेगा. गवर्नमेंट ने कहा सर्कुलर 184 में पास्ट को ठीक करा और बोला कि आपको प्लेस ऑफ सप्लाई बाहर है बट आईटीसी विल बी अलाउड through a circular 184. But for future purposes, the proviso to section 12(8) proviso has been deleted. The proviso to section 12 subsection 8 has been deleted. So with this, I just show you one more point here. See, these were the various amendments that have been introduced in indirect in GST part and in CGST and IGST Act. All have been mentioned to be notified with effect from 1st April 2023. However, out of these two amendments have been given the retrospective effect. So with this, I end up my deliberation for the day. Thank you so much for patient listening. Now you can enjoy your tasty meals. And over to you, sir. I can't hear you.
Thank you so much for your wonderful deliberation, ma'am. Would like to request all the panelists to come on screen. Manoj sir, you would like to say something, sir? You are not there in the beginning. Sir, you are on mute. Yeah, please continue.
आंचल जी ने तो आज बहुत अच्छा बोला. मेरे साथ स्टाफ भी बैठा हुआ है, वो भी सुन रहे हैं सी आर्टिकल्स, तो सबको बड़ा अच्छा लग रहा है. आपने बहुत ही अच्छी तैयारी करी है और यूट्यूब पे भी लोग काफी देखेंगे और मुझे तो लग रहा है कि बहुत अच्छे से समझाया है और मजा आ गया. थैंक यू सो मच.
आंचल जी अभी भोपाल आ भी रही है ना, 11 तारीख को भोपाल भी आ रही है.
हाँ, तो आपका स्वागत है भोपाल में.
Thank you so much, sir. Thank you.
हाँ, भोपाल अच्छा शहर है. आप समय निकाल के आइए घूमने के लिए, बहुत अच्छा है भोपाल.
Sure, sir. Sure. अभी तो सर बैक टू बैक ट्रेवल है, so whenever I will come next time, we'll surely visit the city.
Thank you. आपका वेट कर रहे हैं. Okay.
Pleasure,
Over
sir.
to Virag ji. Virag ji.
Thank you so much, ma'am, for the wonderful deliberation. We have many comments from the participant side as well. Very nice deliberation. Thank you very much. Thank you so much to all the speaker. So we have a vote of thanks from audience side as well, ma'am, for the wonderful deliberation as always. Despite of limited time, you have made the PPT also, and there is no error, as you are thinking that there may be error, but there is no error. Errorless PPT and wonderful a presentation with the colorful presentation. I would like to say, when you are presenting with the red color the deliberation, so it's a really enjoyable, ma'am. I received many comments also from the participant side that thank you for organizing the ma'am session on the first day itself. So we are very thankful to you, ma'am.
My pleasure, and I'm really thankful to all of them for their wonderful words.
Thank you, ma'am. And we are also privileged to know that Connect Easy is one of your favorite platform to deliberate the session. So thank you, ma'am. Thank you.
It's always
विराट जी
pleasure
पीपीटी
connecting
तो
with you,
बहुत ही
Virag
अच्छी
ji.
चलिए, thank you very much, Virag ji, for organizing this program. Thank you very much. Thank you to speakers.
Thank you for all your support, sir.
Right.
All the
Thank
best.
you so much, Ketan sir, Naveen sir, and Aanchal ma'am for the wonderful deliberation on the day first itself for the budget session, and within a 5 or 6 hours we can say when the budget session is completed, and it's a the audience will take the benefit. We have already seen that more than 1,000+ views on YouTube, 1,200+ views on YouTube as well. So it's a great feeling to organize this, and we are overwhelmed with the support from the participants as well. So thank you to all the attendees for making this a successful on a day one, and we'll continue with this on our Connect Easy platform for the benefit of all the fraternity member. Thank you, ma'am. With this, we are concluding our today's session. Thank you all.
Good night.
Good night, all.